President of Strategic and Corporate Development. It's my pleasure to welcome you to AAR's 2023 Investor Day. Before we begin, I'd like to remind you that comments made during the presentation may include forward-looking statements as defined in the Private Securities Litigation Reform Act of 1995. These forward-looking statements involve risks and uncertainties that could cause actual results to differ materially from the forward-looking statements. Accordingly, these statements are no guarantee of future performance. These risks and uncertainties are discussed in the Risk Factors section of the company's Form 10-K for the fiscal year ended May 31st, 2023. In providing the forward-looking statements, the company assumes no obligation to provide updates to reflect future circumstances or anticipated or unanticipated events. Certain non-GAAP financial information will be discussed during the presentation today. A reconciliation of these non-GAAP measures to the most comparable GAAP measures is set forth in the appendix to the presentation slides. So we have an exciting agenda for you today. First, our Chairman and CEO, John Holmes, will take you through the company and our growth strategy and targets. Our Chief Commercial Officer, Chris Jessup, will go through our markets and positioning. Then you'll hear from four of our business leaders, Sal Marino on used serviceable material, Frank Landrio on distribution. We'll take about a 10-minute break, come back and you hear from Tom Hofer on repair and engineering, and then Nick Gross on integrated solutions. We are thrilled to have one of Trax's co-founders, Jose Almeida, with us today, and he and Andy Schmidt will take you through Trax and the power of the AAR Trax combination. Our Chief Financial Officer, Sean Gillen, will discuss financial performance and capital allocation. John will wrap up, and then we will take questions. Before we jump in, we have a short video that we would like to share with you.
Feel-good movie for the whole family. I'm just happy it worked. Okay. All right. Thanks, Dylan. You did where'd you go? An amazing job reading the forward-looking statements and introducing us all. So I'm going to kick us off here and talk a little bit about the company, the strategy, and then you'll hear from the rest of the team. And I've been at AAR for 22 years, and I've been CEO for about 5 years. And one of the things, of course, that I've loved doing is spending time with our employees all over the world. And we do town halls, we do different events, et cetera. But one of the things I do like to do the most is have lunch with brand new employees that have just started with the company. And I did one of these lunches week before last. And of course, there's lots of questions. And one of the questions that a woman asked me was, so John, what do you think your legacy is going to be? And my first reaction was, okay, whoa. It's way too early to start talking about legacy. I feel like we're just getting started. But as I thought about it, one of the things I'm most proud of, I think about the time as CEO, is the focus that we have brought to the company, the focus around our portfolio. We're going to talk about our 3 new segments a lot today, but the focus on those 3 segments: parts supply, repair and engineering, and integrated solutions. The focus in each one of those segments, deciding which parts we're going to repair, which parts we're not going to repair, getting out of certain product lines, getting into certain product lines, getting deeper with a smaller group of OEMs so that we can really become extension of theirs in the aftermarket. AAR has meant, for those of you that have followed the company for years, AAR has meant a lot of different things to a lot of people over the years, but we are now more focused than ever. And anything we do, any investment that we make for organic growth or inorganic expansion is going to be around these 3 areas of focus: parts supply, repair and engineering, and integrated solutions. And we want to underpin all of that with investments in digital technology that's going to drive more efficiency, make us stickier with the customer, and ultimately continue to improve our margins. So we're excited about that. And by the way, I gave you essentially the entire strategy presentation on my bio slide. And by the way, yeah, I'm John Holmes. Okay. Let's talk about the vision. We want to be the most respected, independent, I'll come back to that word independent in a minute, provider of aviation parts and repair services in the world. And we want to create value for customers through differentiated capabilities, offerings, and we want these to result in a sustainable, unique competitive advantage. You're going to hear that word independent a few times throughout the day. When we say independent, we mean we are not part of an OEM like an Airbus or a Boeing, and we're not part of an airline like a Lufthansa Techniques. Many of our competitors are not independent, and we are the largest for what we do in that regard. And we think that independence is an asset. So again, most of you are familiar with the AAR story, but just to put it on one slide in one place, a quick overview. We were founded in 1951, so we've been around for decades. We've been profitable almost that entire time, and we've grown considerably. We've seen lots of cycles, and each time we go through a cycle, we come out stronger on the other side. Market cap today is around $2 billion. Our sales are around $2 billion. Of course, we're publicly traded on the New York Stock Exchange. We have about 5,000 employees, and this group of businesses, that focused group of businesses I just described, have never been more profitable. Operating margin is 7.5%, and we believe we can expand from there. We have an amazing group of customers in multiple markets. We service the commercial market, the cargo market, regional, government, and we're really proud of our customer base. And again, 4 main areas of business. I'm going to focus on 3 of them today: parts supply, repair and engineering, integrated solutions, and expeditionary services. So to start this slide, I want to kick off with actually expeditionary services in the lower right. So expeditionary services is our legacy manufacturing business, and we have a leadership position in that business where we make cargo pallets, shelters, and containers. And it's a good business. We've been in it a long time, but it is not the area of future investment and focus. What we're going to do is focus on the other 3 segments today: parts supply, integrated solutions, and repair and engineering. So I'll come back to parts supply. So in parts supply, 2 main areas inside of parts supply: used material and new parts distribution. So used material, we're leaders in the world in this regard. We tear down dozens of aircraft and engines, and we resell the parts in the market. And this has been an area of a lot of focus, and you'll hear more about that today. In distribution, we're the largest independent supplier or distributor of factory new parts, and we've got a unique strategy in this business. We focus on a narrower group of OEMs, and for the most part, we only do exclusive distribution or relationships. When we sign up with an OEM, we're the only distributor out there selling their products in any given market. And our offering in return for that is we do not offer competing parts or competing product in a market as well. So if we represent one manufacturer of pumps, we're not going to represent another manufacturer of pumps in a given market. And this strategy has served us very, very well and allows us to get closer and deeper with our OEM partners in distribution to truly become an extension of theirs in the aftermarket. We have an online parts store. This is an increasing, growing channel for us in terms of where we sell parts. You'll hear more about that later. And of course, we are 24/7. We provide AOG coverage around the world to the extent that one of our airlines needs a part in an important situation. Repair and engineering. We're very well known for this. We're one of the largest in the world for outsourced heavy maintenance. We've got 6 facilities here in North America. We've got a concentration on narrow body, and we're very proud of the network that we've built. And we work on average between 700 and 1,000 aircraft a year through our facilities, and you'll hear more about that later. We also do component repair. We have 2 facilities for component repair, and we also have one of the most comprehensive offerings as it relates to landing gear overhaul in our facility in Miami. We also provide engineering services. We don't really talk a lot about that, but it is an important offering. So when airlines go out and they want to reconfigure their business class cabin or change something on the aircraft, they come to us. We do the engineering work. We essentially develop the blueprints. We get them certified, and we either do that as a fee for service, or in some cases, we'll actually perform the touch labor to do the mod ourselves. And we are entering the PMA space. We have a small but growing PMA effort that you'll hear more tomorrow or later on today. Integrated solutions. We service both the government and the commercial market in integrated solutions. And integrated solutions, as the name implies, basically takes our parts and inventory sourcing expertise and combines it with our repair and repair management expertise. And we put these two things under long-term contracts, like I said, both for government customers and for commercial customers. In the government world, they're PBL, 3PL programs. In the commercial world, we call them Power by the Hour programs. So those are the three segments that we're going to talk about today. Before I go into more detail about the business, I want to touch on our culture and our values. We are extremely focused on our entrepreneurial culture, and we're really proud of our culture. And that culture is underpinned by our values. I'm not going to go through every one of these up here, but I'll start with the first, and that is quality first, safety always. We know that everything we do is ultimately involved in safety of flight. So quality and safety are top of mind for us all the time. And the last value I'll mention is at the end there, own it. Everything we do, big or small, any small task, big task, anything regardless of who you are in the company, you own your decisions, you own your actions. And of course, you can see what's in the other values in the middle there. But if you go to any one of our facilities, whether it's a hangar, whether it's our headquarters, whether it's a sales office in Singapore, whether it's here in this room, you will see these values everywhere. It's how we hire people. It's how we train people. It's how we evaluate people. And ultimately, we pay people in terms of their performance against these values. So very, very important to the culture of the company. And speaking of the culture of the company, I want to take just a second and talk about our corporate citizenship. When we were back here 4 years ago, ESG wasn't as focused as it is now, but we've been doing a lot of great things for years and years and years in our communities. And I'm really proud of the things that we do today and the things that we'll continue to do. We've reported on these activities in 2 ESG reports that we've put out over the last 4 years. I'm sure you've seen them. We're proud of what's in there. We're evaluating ourselves against all the proper standards for ESG, and we intend to put out a new ESG report every 2 years. The other thing we focused on in the last 4 years is compliance. We do business all over the world. We do business with flag carriers, state-owned enterprises in dozens and dozens of countries. So compliance and making sure we are doing things right is incredibly important. And the cool thing is, it's a differentiator for us in the market. Meaning, when we go to a big OEM and we're going to represent them on an exclusive basis around the world, they want to make sure that our compliance standards are world-class, and they are. And that is actually a differentiator for us in the marketplace when we compete against others who don't operate in the same way, particularly in distribution. Last thing I want to mention here is that these efforts around ESG and our culture and the way we hire and treat our employees have been recognized through repeated awards, many of which just in the last year, and we're really proud of that. So you're going to hear a few key messages from the team throughout the day, and I want to just give you a preview of what those are. The first, we're going to focus on the actions that we have taken since we were last here in 2019, particularly during COVID, to streamline the business. We've exited underperforming assets, underperforming contracts. We've consolidated facilities. We developed proprietary labor pipelines that we'll talk more about. And we've improved our efficiency, particularly in our hangars, and all that's adding up to improved profitability. We are operating in multiple growth areas. You'll hear from Chris Jessup in a minute about the markets that we're operating in. They're large and growing. In many areas that we are still recovering from the pandemic. So by definition, there's recovery growth built in that we're excited about, and we're participating in that. And you are seeing increased user adoption of USM. It's been around for decades. We were actually the original company that started offering used material to the commercial marketplace. But because of the OEM supply chain issues, because of the desire for airlines to look for different sources of savings, USM is achieving the broadest user adoption that we've seen. We expect to continue to take share in distribution. Our 2 largest competitors, Boeing and Airbus, are focused on other things. And we are taking share in that market and plan to deploy capital to continue to build out distribution. We want to continue to expand our maintenance footprint. You saw the Miami expansion announcement 2 days ago. We're excited about that and working on others. And you'll hear more about the commercial value that we believe we can bring to our government customers. We want to drive continued differentiation in everything we do, most notably through investments in digital technology. We have software solutions that we've been working on ourselves, but now with the addition of Trax, we're pretty excited about what we can do there. And we want to continue to raise the bar on shareholder transparency. We want to make AAR easier to understand. And that's why we announced the new segments that we did 2 days ago. So basically what we did here is we took aviation services that represented about 90% of the company, and we split it up into 3. parts supply, repair and engineering, and integrated solutions. So as you see here, parts supply is the largest and most profitable area. It's also the area, if we think about organic growth, that we probably have the most opportunity. Repair and engineering, we expect to continue to grow that segment through facility expansions like the one we just announced in Miami. But we also expect to be able to improve margins there through the use of technology, whether that's going paperless, whether that's employing drones and other technologies to help bring more efficiency to aircraft inspection, et cetera. We believe we can continue to expand our margins in repair and engineering. And integrated solutions. Integrated solutions, again, commercial power by the hour programs. That's been a challenge for the company over the last few years. We made great progress this past fiscal year in improving that operation, and we expect to make more progress this coming year, what will help margins there. And we believe growth in this business can come from not only power by the hour programs in the commercial market, but also securing more government wins. And we've got a very large pipeline of government opportunities that we'll talk more about. So again, those three segments are the focus: parts supply, repair and engineering, and integrated solution. And what's so unique about AAR is not just our scale, because as I mentioned, we're largest in the world for many of the things that we do, or our independence, which we believe is an asset, but the way that these three businesses work together. And I want to give you a couple of examples. Our USM business, we are out in the market every day. It's a highly transactional business. We've got our finger on the pulse, literally, of what's going on in the parts business, what's coming available, what's breaking, what are the needs of the airline community. And we can use those parts internally to support our airline operations, get aircraft out of the hangars on time. We can utilize our distribution relationships to supply parts at a more cost-effective basis to certain of our repair operations. Also, if you're working on 700 to 1,000 aircraft a year in your hangars, again, you can collect a lot of data about what's breaking, what's in demand, and that helps us inform what parts are going to go on the shelf. Similarly, going the other way, if we're pitching a new OEM on a distribution agreement on an exclusive basis, and OEMs always want to focus on selling the next upgraded part to an operator, or even better, displacing a competitive product. The fact that we're going to see hundreds and hundreds of aircraft in our hangar, the best time to make that upgrade or displace competitive product is when the aircraft is in maintenance. And since we're seeing hundreds of aircraft, that's another channel to market that we can offer for our OEM. So repair and engineering helps drive OEM distribution. And again, being in the market, seeing what's repaired, et cetera, it helps develop a great source of data that we can use to inform PMA part development decisions. And integrated solutions, by definition, as I said before, brings these things together. It's an outlet for repairs, and it's an outlet for parts. So we'll have a version of this when we go through each one of the slides for each of the business units, but I want to highlight some of the key things at the company level that has changed since we were last together in 2019. First, again, focus. We exited non-core assets, underperforming businesses, we consolidated facilities, and that's coming through in our market and our margins. We've also developed some very important relationships with schools. We've started programs. Do you need to take that? I'm kidding. We've started programs in different schools, and we really have developed proprietary sources of talent that our competitors have not. We were doing this before the pandemic. Other people pulled back from this during pandemic. We actually leaned forward and doubled down on our efforts and have expanded the number of partnerships with schools. And we now have access to talent that our competitors don't. And this has really served us well as we've gone into this highly competitive labor environment. I talked about technology in terms of driving improved margins and efficiency inside of our hangars. But one of the other things we've done in the last 4 years is bring more focus to what we do. We are now focused on narrow body maintenance for a smaller group of customers. And why is this important? It's important because if you have thousands of mechanics coming to work every day, they need to know what they're working on and who they're working for. And if you're going to go in and you're going to work on a 737 one day and you're going to work on a 757 the next day, that drives inefficiency. If you're going to work for one customer over here that has a different set of expectations versus another customer over here that has another set of expectations, that drives inefficiency. We want our people to be working on the same assets for the same customer so that they get to know, again, that customer's expectations. This drives quality and it drives efficiency, and you've seen that in our margin improvement. And again, on the USM side, We've added multiple sources of USM. We're going to talk about the Fortress relationship that I believe many of you are familiar, but having proprietary access and assured access to USM material, like through the partnership with Fortress, is really important. What's also important is signing up exclusive supply agreements with major customers like certain engine shops around the world. So now we've got assured supply from certain sources like Fortress, and we've got assured sales as we've expanded the exclusive supply agreements that we have with used parts buyers like engine shops around the world. This not only allows us to go out in the market and buy with confidence because we know we have a home for it. If we make an acquisition, we know we have a home to support an exclusive contract, but it also provides more predictability to the USM business. And of course, we want to continue to take share in our exclusive distribution business. We've signed up a number of agreements in the last 4 years: Unison, Arkwin, Ontic, Northrop, and Collins, and we're going to keep going. And finally, we've expanded our digital capabilities, both internally with paperless initiatives, our online parts store, but also with the acquisition of Trax, and I'm excited that you'll hear more about Trax later. All of that, of course, is added up to improved profitability. We just finished a record year. I want to make sure we just finished a record year. Did everybody get that? $2.86 in adjusted EPS. We are at the highest margin we've ever been for this group of businesses, over 2% higher than we were the last time we were together. We're delivering stronger cash flow and more predictable cash flow and better cash conversion. And just in general, we have a better capability and a more focused set of offerings. So again, as we think about growth drivers, and you'll hear a bit of this from each of the individual presentations, but it's important to note that we are in large and growing markets, and we're an important segment of large and growing markets. The recovery in the airline industry is still occurring in various places around the world, and we're participating in that. But there again, you're seeing increased USM adoption. We're the largest provider of USM in the world, and that's benefiting from us. I mentioned that we're going to continue to take share in distribution, which is great. We want to continue to expand our MRO footprint and get more efficient inside our hangars. The government world. The government continues to focus on utilizing commercial best practices to help support the current fleet in a constrained budget environment. And this is really good news for us. And a great example of that is in the past year, the government passed a law as part of the NDAA, and we worked with our friends in Congress to get this done, that requires elements of the DoD to consider USM along with buying new parts. So anytime the government goes out to buy a part, they're now going to consider USM. So you're going to see more adoption of, again, commercial offerings like USM, but in the government. And Trax, of course. You'll hear more about Trax later. And I think that everybody in the room and on the line is going to be really impressed with the breadth of capabilities offered by Trax and the customers that they already serve. Trax literally does every single thing that an airline needs to run its maintenance operation. We'll go through examples of that, but it's incredibly important and powerful software. And if you think about the possibilities that that opens up for AAR and what we do, it gets really exciting. We'll talk about one specific example and idea that we have there today. In addition to that, we want to continue to use technology inside of our hangars. We're going to go paperless, partnership with Trax, but also part of our own initiatives, wearables, drones, etc. There's a lot of opportunity to drive efficient on the maintenance floor through technology, and that'll translate into market margins. And finally, PMA. We do believe that PMA has a place in our portfolio, and you'll hear that we've started some early efforts there. So this adds up to, and again, I want to emphasize these are long-term growth targets. We've defined that as 3 to 5 years, but we believe that we will be in the 5 to 10% on average annual revenue growth rate. We believe organically that as we shift the mix towards parts and continue to drive efficiency in the operations, that we will see operating margin north of 10%. This will add up to annual EPS growth rate of 10 to 15%, and we want to be good stewards of capital and continue to improve our ROIC. So what's coming next? Chris Jessup is going to talk about the markets in which we operate. Sal Marino, as you heard, is going to talk about our USM leadership position. Frank Landrio is going to talk about the distribution model that is resonating with OEMs and the unique elements that we offer there. After Frank Landrio, you guys are going to need a break, so we'll take a 10-minute break. We're going to talk about the efficiencies. Tom Hofer is going to talk about the efficiencies that we're driving inside our repair and engineering business. We'll talk about the integrated solutions programs offering. Then you'll hear from Andy and Jose about Trax. Sean will talk about our financial performance. Then we'll take Q&A. So with that, I'm going to turn it over to Chris Jessup.
Thank you, John. Morning, everyone. My name is Chris Jessup, Chief Commercial Officer of AAR. My tenure with AAR dates back over 21 years. I officially joined the company through the acquisition of what is now today our Miami airframe MRO facility. 21 years, joined the company with the acquisition of our Miami airframe MRO facility in March of 2008. So heavy MRO tenured background, grew up through the parts segments of AAR from there, and have been in the current role as Chief Commercial Officer now for the past 6 years. Going to start with a few slides on the commercial offerings and kind of how we're positioned, then we'll go into a few government slides. So when we look at where we sit today, commercially speaking, with the recovery of COVID and the pandemic, you can see that the ASMs are heavily correlated to our commercial sales. The chart on the left overlays both our commercial top line numbers for the past 6 years with available seat miles. So you can see that tight correlation that is ongoing there. With all that being said, air travel recovery still has not fully recovered. You've got the latest published reports from IATA showing at the end of May that we're at 96% of pre-COVID levels when you look at May of 19 to May of 23. Domestic markets are up close to 10% at 9.4%. However, international markets are still lagging in the 11% range down year over year. So while we've seen some really nice strong recovery in the kind of air travel capacity globally, there still is more recovery to come in the next 1 to 2 years. When you look on the right-hand side, it's an important thing to point out that there is a very resilient market when it comes to the overall air travel industry. You can see dating back to 1978 all the way through 2023. The chart here shows global available seat kilometers, and you can see even with the impacts of 9/11, financial crisis of 2008, and even what we went through in the COVID industry, there's been very strong rebounds. And so the key there is the aftermarket, where we're heavily correlated to. We're very resilient. We typically bounce back much faster than if we were heavily tied to the new aircraft OEM production cycle. When we look at what's going on in the deliveries and the aircraft retirements market, it's no surprise that the deliveries have been heavily impacted with the COVID environment, whether you're OEMs who have been struggling with supply chain constraints, labor constraints, or there's been ongoing regulatory issues that have impacted OEMs from time to time in the last few years. You see that it's going to take till 2025 for the industry as it currently sits today with what we know to get back to kind of 2018 peak delivery run rates on an annualized basis. Those impacts have driven the need for an increased aftermarket parts and heavy maintenance and modification requirements on those aircraft. John touched on it briefly, but we have seen as OEMs have been challenged to keep up with the supply of new parts, typical airlines who were heavy OEM going into COVID, they opened up their eyes to used serviceable material. So during that time, we've been able to kind of leverage both our new distribution offerings where parts were available, but we also were able to show the benefits of used serviceable material, which has been very helpful from that perspective. The other thing to keep in mind on the delivery chart is as we look at going forward, while there's strong backlog and OEMs are doing their hardest to kind of recover everything, 75% of the aircraft that are going to be delivered over the next 10 years are going to be in that narrow body market, which is a strong offering that you'll see resonate through all the different business unit P&L leaders as I get up here and explain all of our overview and positioning. On the right-hand side, you see how retirements have been trending. You know, in 2020, we peaked out at a little over 800 aircraft that were retired. The originally predicted tsunami wave of aircraft retirements did not materialize when kind of COVID hit and everyone thought we were going to be putting down a bunch of aircraft. They never see the light of day. As you can see, the lowest point there was in 2021 with retirements, just a little over 400 aircraft. And that was the lowest time since 2007. This industry had seen that little of retirements happen. Again, assuming deliveries will scale back up in 24 and 25 to kind of pre-COVID run rate levels, we expect retirements will also kind of scale up to pre-COVID run rates as well, kind of in that 2.5% to 3% retirement range compared to the total number of aircraft in service fleets. And that will help loosen up that supply of USM material, which you will see and hear from Sal Marino when he gets up here to talk about that part of our business. So when you look at the commercial market overall and kind of how we're positioned, we are very excited about where we are currently sitting with our diversified portfolio of service offerings and the opportunities that are ahead of us. You can see in this chart, we finished as a global MRO industry at about $84 billion market size. When you look at what was going on pre-COVID, back in 2019, this market was $87 billion. So you're pretty much close to recovered in 22. As we get through 23, the latest forecast has us finishing as an industry around $88 billion. So when you look at over the next kind of 3 years, growing close to $20 billion in market size, and our commercial positioning only represents $1.3 billion of that, 85-ish million today, growing $20 billion, combined with the fact that these numbers are in real US 2022 calendar year dollars, doesn't take into account inflation. There's plenty of opportunities for us to continue to grow, especially when you look at the airframe heavy maintenance and modification segment, components, and the engine maintenance areas, which is really where, when you look at repair and engineering, integrated solutions, and parts supply, we are very strong positioned in all of those areas. Line maintenance doesn't really apply too much to us, while we will help out our airline customers in the MRO space when they've got some urgent line maintenance needs. We don't play big in the kind of scheduled day-to-day line maintenance, overnight check type support. So again, the markets that we're really strong positioned in, 5+% CAGR over the next few years, it has us very excited about what's to come. When we transition from the commercial space over into the government space, you just look at the global market in total, over a $2 trillion addressable market. It grew a little over 3% in 2022. You've got a combination of a lot of your foreign militaries looking to increase defense funding to deal with what's going on in today's kind of global environment, whether it's what's going on in the European region or the increasing concerns growing in the Asia Pacific region. There's a lot of increased foreign military spend happening. You take that and you combine it with what's going on with our U.S. government spending, where there's challenges at times to continue to increase that spending, but it's still an $875 billion roughly addressable market with our U.S. government. And when you look at all of that, you find the U.S. government in particular having to reallocate funds. There's a lot of money being spent towards developing new technologies. And so as the government is focused on those new technologies, we still have a lot of these legacy platforms still in operation. Lives are being extended. You'll hear more from Nick Gross talking about all of this. But again, it's just a very, very large market, and it's similar narrative to the commercial space. When you look at AAR at kind of $650 to $700 million in global government sales as we finish FY23 with a market of over $2 trillion, we're extremely excited about the opportunities ahead and how we're positioned in areas of growth that we see coming forward. The chart on the right-hand side speaking to how the U.S. government is finding themselves challenged with keeping up with kind of legacy fleets and the overall readiness of those platforms, you can see an unfortunate steady decline in both our Department of Navy and Air Force when it comes to some legacy fighter aircraft, sitting in the 40 to 50% readiness levels versus goals north of 80%. Again, we feel we're very strongly positioned to help the government out in those areas, leveraging our experience and supporting commercial legacy platforms. So we're very excited there. Specifically to extend on that just with a few bullet points, and again, you'll hear this come out from a lot of our business unit leaders. First and foremost, the governments heavily will contract on a programmatic basis. While there is some transactional activities, a large majority of how our U.S. government and foreign militaries go about their business is contracted multi-year source programs. We feel, as the largest independent in this space, our decades of commercial experience supporting programmatic programs, whether it's in repair and engineering, integrated solutions, or parts supply, uniquely positions us to leverage that knowledge to be able to compete on those offerings and kind of have the experience of lessons learned over the years on multiple platforms, whether it's airframe, engines, or parts, to be able to offer a strong value proposition to the government. Second there, and you'll hear Sal Marino talk about this when we get to the used serviceable material piece, we're very excited about the recent change with the Department of Defense when they're looking at those tightening budgets. They're currently in the middle of writing policy on how the various armed forces will look to utilize used serviceable material for equivalent commercial platforms that are out there today flying for U.S. airlines. So we feel we're very well positioned to be able to expand on that as well. The third bullet talks about the captains of industry. AAR in the last year was very successful in becoming the first independent company to achieve the status of captains of industry. You'll hear Nick Gross go into a lot more about that, as well as Frank Landrio. But the key there is taking our new piece parts distribution and doing more with our OEM partners, not only for the U.S. government, but for a lot of the expanding foreign militaries that are looking to grow the spend in those areas globally. From there, this is an overview of the map of our global expertise and reach. As you can see, we've got dots across the globe here. No surprise that within North America, you've got a heavy concentration of dots. When you hear Tom Hofer come up and speak about our repair and engineering segment, we've got a fairly large concentration of brick and mortar operations with our airframe MRO facilities and our landing gear facilities. But as we expand outside of the North America market, we leverage decades of AAR's DNA in the parts business, where we've had to build a global sales team to support all that parts supply. And throughout our growth, we've leveraged that for our new distribution, as well as our integrated solution offerings as we've looked to expand globally. So I won't go through all the dots, but as you can see, we've pretty much got every part of the world covered with representation from AAR. And last but not least, we are very proud of our diversified customer base globally. You can see some of our key customers, whether you're commercial, cargo, regional, OEMs, and or the governments that we support. We, again, span the globe when it comes to this. And when you look at our top 10 customers, as an example, we've got over 15 years of tenured experience supporting these customers. And we've got a lot more examples above and beyond that as well. What we typically find is when we get into a customer might know us for parts, one customer might know us for repair and engineering, one might know us for integrated solutions. As we get into an account, we do a very good job marketing our overall portfolio of offerings and looking to expand the activities that we do with those customers across all those segments. I will now turn it over to Sal Marino, who heads up our used serviceable material parts supply part of the company. Thank you.
Thank you, Chris, for that introduction. Appreciate that. Good morning, New York, and all those on the phone. I'm Sal Marino, responsible for our parts supply business in that arena for used serviceable material, as you've heard a lot about it already. So very excited to talk in depth, a little bit more thorough on it. I've been with the company for 28 years. Started off working in the engine business within AAR, and then in 2014 took over the engine, airframe, and our aircraft sales and leasing business. Very honored to, just excited to represent this business. This is, as John mentioned earlier, one of the founding businesses of the company, which we refer to it a lot of times as trading as well. So it's an honor to represent the business and how we go move forward. So we'll take a look at, our offerings that we have. So, like John mentioned earlier on our parts business, a lot of it is going out, acquiring aircraft, acquiring engines, dismantling them, refurbishing the parts and reselling them to operators, lessors, MROs, either parts companies as well. And it's a significant amount of savings that we provide compared to buying parts from the new manufacturers. We also when we do some of these acquisitions, we will take some of these assets, whether it's the aircraft itself, the engine itself, landing gears, and we'll refurbish it and we'll sell them as whole assets. We'll put them on lease and sell them. There's a lot of flexibility there, but it's a big piece of our business as well. And then a lot of operators or smaller, for instance, like a cargo operator looking for someone to help them manage their fleets a little bit better and maximizing the USM, will have us manage their engines. So we'll contract with the operator. We will contract with, say, an engine shop. We will manage that engine on their behalf. And again, the goal there is to provide as much as possible from the USM side of things to keep the costs down. Those are focus platforms on the bottom with the aircraft and their respected engine types. Talk a little bit more about it as we get into it and what that significance means when it comes to the volumes that we see. You can see the breakdown there as you'll hear from Frank later, and the distribution and the USM side of things are fairly close when it comes to our revenues. Again, our trading business or the USM business is heavily concentrated on the engine side of things. On engine side of things, for those that aren't that technically advanced on it, there's only so much you can do on the engine side in certain parts to repair them versus on the airframe. It becomes a lot of cases of how much you want to spend to repair that part. So again, the replacement need for parts is really heavy on the engine side of things. We're really proud to have a nice mix of focus on cargo operators, passenger operators, as well as having dual roles. Some airlines have, I'm sure you've read about all the conversions that are going on. They both have passenger campaigns as well as cargo. We do take a lot of pride. It's been said a couple of times. We do believe we're the largest independent USM globally. Here's some of our signature customers that we have. You'll hear some more about some of these as we do, as Chris mentioned, across the board. These are significant in the respects to not just the USM part of things, but the MRO, distribution, and et cetera. So when we talk about what we do, and we're kind of taking a little bit of a different angle here and just to understand exactly what the USM side of things and how we do things. So there's kind of this bubble chart here that we're looking at. And if you look at that square in the middle there, this is the sweet spot. So this represents pretty much from an engine perspective, about 75% of the fleet. And the sweet spot's about 10 to 25 years of age. And these are the focused assets, and really kind of leads into, how do you figure out what you want to buy? How do you figure out what's striking in the marketplace? And it's really kind of three things. It's, robust markets. You've got over 15,000 aircraft that were produced on A320s and 737 NGs, which represents what you'll hear from me talk about the CFM56 engine, 5B, 7B, quite a bit, as well as the V2500s, 30,000 engines. So right there, you can see that's a very large market. And when you look at that as well, about 60% of those aircraft are 2010 and younger. So again, they're 13 years old to new. And that's going to be a marketplace for many, many, many years to come. You're talking about estimates are over 20,000 shop visits for those engines in the next 10 years. So again, robust markets, that's where to play in, and that's one of our sweet spots. We have exclusive customers as well. Again, John had mentioned on that side of things, it's really key to lock up customers that you get basically, first right, and you're on the hook for making sure that you provide the parts. Engine goes in the shop, parts are required. That customer comes to you and says, I need a part. And you provide it, or you go out and find it. But for the most part, we already have, things in the pipeline to be able to deliver those parts when they need them. And there's some, nice extensions on those contracts, especially the PW2000. It's on the 757. It's a cargo operator, and we've been doing that for, I think, over 10 plus years, and we're going to be going on for another 5 or 6 more. Legacy products as well, our specialty, PW4000. Again, this goes on 767, 747s, largely the cargo markets. There's still aircraft being converted, and when an aircraft's being converted, you're talking another 15, 20 years that you'll still be supporting them. And again, those conversions, when they end up with the cargo operators, tend to have a lot more focus and drive on the USM side of things. So when we're sourcing assets, we're, to give you an idea, how do we go out and find things? We have, industry relationships, and obviously we have our reputation. Again, we go from operators, lessors, to MROs, other parts traders that are in the industry. The cross-selling is huge. Like Chris had mentioned, we're talking to some of the large operators. We're always in the back of our minds thinking about how the enterprise can work through the MRO side of things, distribution, as well as USM, and whether that's selling or buying. A lot of our sales folks that are out in the world, and you saw our global map, it's really critical that they always have in their mind not only what to sell to their customer, but what else do they have for sale. And understanding fleet transitions, understanding fleet retirements, knowing the tech teams that these airlines, operators, lessors, especially in some of the lessors, are smaller technical teams that they farm a lot of that work out. I don't know if most of you would know in here, nearly half of the fleet in the world is leased. Every airline owns an airplanes. In fact, you can get out an airplane and there can be 2 leased engines from 2 different companies, and landing gear could be leased from somebody. So a lot of dynamics in the world of these aircraft. Digital market platforms, you're hearing a lot about that. We're very excited about the opportunities and things that are, both from a supply standpoint, as well as being able to go out and find material. And then, huge, this is one of the biggest things, the biggest strengths I think we have. We have the ability to close, and we can close quickly a lot of times. Strong balance sheet that they have allows us to do those type of things. But from, again, you'll hear a common theme here about trust, confidence. When we say we're going to do something, we're going to do it, and we make sure that we get those deals over the line. Again, so when we're trying to figure out after we determine, we've got these markets, you got the engines, the airframes, kind of three things that happen at that point. We have somebody kind of negotiating on the front line, trying to get pricing, understand where the market's at, where the customer is looking to, try to strike their target price on a sale. We also have our product line specialists that, we have broken out by like Airbus, Boeing, Pratt Whitney, GE, and Rolls-Royce. These people that are in those positions have been in the company for over 20 years in most of those roles. So they really have an understanding of those markets, really can get a good feel for all the engines that are airframes that they've torn down over the last couple of decades, and understanding how the engine performs and behaves. If you're going in and you're doing analysis, we do it by part number. You can look and say, yes, we have 100 parts or 100 blades in the engine on this stage. Generally what we've seen, we're getting 50% yields if the engine looks like this with the time of usage, the operating conditions that it may have been in. And so that analysis is taking place from a financial standpoint. And then we have our tech team over here, in-house tech team. And we have employees that have been over 40 years in our technical department, have seen a lot over the years, both on the airframe and engine side. So, they're doing the records review. They're going out in the field. They're crawling around the airplanes. They're putting borescopes into the engine so they can look at every part in the engine to see how it looks. And then all three of us come together and we kind of put an analysis together to come up with that number. And then once we get that, we acquire the asset. The key is every month on a monthly basis in detail, we look how that engine's performing, how that airframe's performing. Is it what we expected to invest? Is it expected to what we would get on the yields from the parts being coming through repair? And if there's any types of concerns or whatever, we get right back on track immediately to make sure that the engine or asset performs the way we expected it to, and not wait for surprises at the end. So our value proposition, and again, for those that aren't that familiar, so the used serviceable material, generally a rule of thumb is somewhere in the 30 to 50% savings. One part could be over $1 million in some of these engines. So you can quickly see just one part that you go out and buy new versus going out and buy USM saves you $500,000. And that's just one part. So if you're looking at an engine that's, roughly $7 to $8 million to repair, and that includes a lot of USM, 60 to 65% of that $7 or $8 million is parts. So if you let that get out of control, that $7 to $8 million engine could be a $12 million engine if you just let someone go fix your engine and put all new parts in it, which at that point, a lot of those engines just become beyond economic repair, BER as we call it. Doesn't make sense. You'll never get out of the asset. So it's so critical to make sure when the engines are going through, especially some of these engines, you got to remember 30 to 40 years old, and they're going to continue to fly for another 20 years. So putting new parts in just doesn't make sense. Again, like John had mentioned earlier, we take a lot of pride in our independence. We will work with OEMs on the really high end side of things when they want specific kind of engines with specific operating conditions. And then of course we'll work with those that are very aggressive and like the alternative approach to, I just need USM. Experience technical side, like I mentioned, the speed, flexibility of our balance sheet as well has just been so key for us. And then, as I said, the common theme here is the confidence and the trust, both whether we're buying or selling. And again, the digital side of things for intelligence and transacting, as we, get to talk about Trax later on and the exciting things that are going on there. In this business, a lot of times people don't even negotiate price until they see paperwork. The parts are worthless without paperwork, absolutely worthless, scrap value. And the idea is, when you buy an aircraft, you may have 10 pallets of boxes of paperwork for the airplane. And you buy an engine, you could have 20 boxes. And the manual process of going through all that it's an old school way, and it's still, I think it'll continue for many, many years. However, having these opportunities with the digital solutions that we have and the capabilities and the things that we've been doing, giving availability quickly to our customers with online access to records instead of having to pile through all that or going physically somewhere, giving them the ability to go through that electronically is key. And it drives in efficiencies for AAR that we can quickly move on to the next buy. And it drives efficiencies for our customers that they can quickly evaluate and make you an offer and transact. So really, really key. And like I said, very excited to have Trax bolt onto that as well to be able to help us move in the future. Man, everything's going so well. Hit the slide, please. Sorry about that. So what's happened since 2019? I was excited to be up here in 2019, and we talked about one of the biggest things. Our case study back then was this CFM 56.5B 7B market that I think at the time was 22,000, now you're 24,000 engines. And that was really going to be our driver moving forward. Like, how do we get into that marketplace in a bigger way, larger way? And, one of the things we're really proud of is one of our partners in business, both from we would sell and as well as buy and support them through aviation company, FTAI Aviation Fortress. Their specialty is they basically have about 350 plus CFM 56.5B 7B engines in their portfolio. And the idea was, how do you maximize the value of those assets? They primarily do leasing, but when those assets come off a wing, how do you maximize it? Whether you put it through the shop or you take the parts down or take the engines down for parts, redistribute them, and then maximize that. So I'll talk a little bit more about that. I've got one slide again to show you kind of how that flows through. I know there's generally some questions like, how does that work? We'll hopefully get some clarity for you on that. Cultural change, it's been huge. There's been a lot of discussion on that from the standpoint of not only the supply chain of things. It's caused USM, but again, the pricing, you cannot ignore it. So typically, we still struggle a little bit. The USM side of things, typically in the Middle East, Asia's generally been always been kind of a new only button in certain areas, but the world's changed, right? And we all know that. And the OEM's been very helpful with that as well. So when you have OEMs price escalations, which some of them did last year, 15 to 17%, great marketing tool for AAR. You can't ignore it. And in some cases, some of the OEMs did 2 price increases last year. So as that continues to develop, and again, I'm talking about in some cases, these are 20 or 30 to 40-year-old engines. It's really hard to say you're buying new parts on something that, that's aging. So, again, the delay in the aircraft deliveries, like Chris Jessup mentioned on some of the newer platforms, has really helped as well. It's keeping the legacy assets flying. It's good for the MROs. It's good for distribution. It's good for the USM side of things. And, we've been taking, that kind of slides right into taking market share on that. Through the pandemic, we really focused on realigning some of the inventory, making sure that as we come out of the pandemic, as we continue to invest, we generated a lot of cash. We also deployed a lot of capital too in certain markets, seeing the supply chain probably not getting any better. In fact, I think it was starting to get better about 6 months ago, and it's actually going to go in the other way again. But we continue to make investments. We're buying engines, buying airframes, getting parts refurbished, getting them on the shelf. As a normal turn time for a turbine blade, for instance, used to be 30 to 40 days. It's now maybe 120 days. So if we've got 5, 6, 7 engines in the pipeline at all times, and you constantly have that material on the shelf and you have it available for your customer, it goes a long way in being able to close the transaction as well as get good value for the parts that you're having. And then the big one here, and you'll hear from Nick Gross in the integrated solution side of things. We're really excited and proud. There's 2 things that you've heard a little bit already about that Chris had mentioned on the U.S. government side of things, opening up the avenue for use serviceable material. A lot of aircraft, believe it or not, are commercially derivative. If you look like at a KC-46, it's basically a 767. If you look at C-40s, it's a 737. There's a lot of commonality between frames and engines. In a lot of cases, it's the exact same engine. We already do some work for Nick and his group on those side of things. So that campaign, as well as whole aircraft. We've had tremendous success in the last couple of years. Government agencies need to upgrade some of their older aircraft. They solicit and go out, and generally will be thinking that they're going to buy a new airplane from called the likes of a Boeing, and we'll go out and take a look at the tenders, see what the qualifications are. We'll go out and find an airframe. We'll go out and find engines. We'll refurbish the engines. We'll refurbish the landing gears. We'll do mods inside the airframe. We'll paint it, put it all together, and it saves them tens of millions of dollars versus the alternative of going out and buying new assets. And we've had some really, really good success with Nick and his team. So the partnership I mentioned with FTAI, this is in my opinion, extremely very powerful marketing tool out there for both companies. We both got together, like I said, understanding as their fleet kept growing in their portfolio. Well, they're obviously very specialized in the leasing markets and acquiring assets. We're very specialized in knowing the parts and the value behind it all. Put the two together, and it's a powerful solution. So, again, the commitment is to for FTAI to be able to provide, as their engines come off a lease, to provide AAR 40 engines for part out. So FTAI maintains the ownership of the assets. AAR is contracted to basically evaluate the engines, do the technical analysis, come up with what we believe the values are based on the scenario I told you earlier about the backdrop on technical and commercial side of things. We will then contract a teardown facility to disassemble the parts. We actually have people on site at the teardown facility, and we warehouse things there. That as soon as the material comes out of the engine, the key is speed. So within 5 days, we call the hot parts, the stuff that really moves quickly. We've got those out of the engines. They're routed right out for repair. Boom, they're into this, the cycle to get to marketplace. In the meantime, the organization, Chris Jessup's organization, the sales front, you saw the global footprint. They're out there. They're already getting the mini packs, we call it, which kind of have like the high level details of what the engines look like. They're already hitting the customer forefront and marketing that material, because before the pandemic, it was just-in-time delivery for parts. Everybody wanted a part today. They would never give you a purchase order for something, a couple months out. Completely changed. We've got some of the airlines out there that, two things, never really used to buy used material. And secondly, never even, if they did, they wanted it, just in time. Now they're like, can I have this mini pack and I'll give you purchase orders 3 months out. Tell me when the parts come back. Yeah, but there might be, I don't care what scraps. I just want to have my name on that. So again, a very dynamic in the marketplace that has changed. I don't see that changing anytime soon, just because the supply chain is still going to be constrained. Even when it does start to come back on, the volumes of the shop visits that are going to take place, that mentality is going to have to stick. So again, we go out, market that, and we invest on the side of the repairs. Again, Fortress keeps the ownership until the end, and when we go ahead and sell the parts, we'll recover our repair investment as well as a fee that for doing the legwork that I just described. So it's been very powerful. It gives us a consistent supply, as John had mentioned earlier, to go into a customer and say, yes, we can provide you parts on an ongoing basis, and here's why. So the two of us have worked very hard, companies, both publicly traded, very well represented in the marketplace, and just going into airlines, lessors, MROs, and winning business with this program. So it's been very successful, and we look for many, many, many years of more success. And then our growth, so last slide, our growth initiatives here. There's very exciting stuff, as I've mentioned. Some of it's, I've already said, but securing long-term contracts, both on the supply side, demand side, key. We've done a few of these already. Very significant one with our FTAI partners, proven to be very, very productive, and especially for our customers. I mean, they really need that support. Driving the USM, again, we've already talked about that. The OEMs are really helping with that, delayed deliveries and so forth. We talked about the USG side of things of the U.S. government. Very excited. I know Nick's going to talk further about that, give you kind of what that excitement really could look like. But again, there's tremendous opportunities there. It's wonderful what they've done with Nick and his team, done with the government, and opening up that door, and more good things to come the next time, hopefully, when we have these sessions. AOG, I mean, like as John mentioned earlier, I mean, it's really key. I think we've all been on an airplane, you're backing out from the gate, and you go back to the gate, and they're like, we need a part. All right, we'll have to call the hangar. Well, guess what? The hangar's calling us generally, or somebody in the industry, to find that part. And having global warehouses around the world, we've got large warehouse in Europe, large obviously in Chicago area, in Asia, and having that 24/7, somebody actually picking up the phone, somebody emailing, and as we move into some more of this digital side of things, trying to figure out from customer standpoints what we can make, how we can make it even easier for them before somebody has to call the hangar and then somebody has to pick up the phone or email. I mean, that instantly being able to have that visibility from an AOG standpoint. And again, I'm sure Trax is going to be able to help with some of those offerings. And that kind of ends the thing here. Having the end-to-end customer digital experience is, kind of the ultimate goal here, and making that, again, not only efficient for AR, but efficient for our customers, that we both can transact in a very quickly way, a very efficient way, as well as being accurate. And having Trax on board now, there's some great tools that we believe we can use already and that we will be implementing over the years. So thank you for listening to our story. We love what we do. It's a lot of excitement. There's a ton of runway ahead of us here, especially as this market continues to come back strong. And we're looking forward to being a part of that and giving you great results. So thank you very much. With that, I will pass it on to my colleague here, Mr. Frank Landriel, that's going to talk to you about distribution.
Good morning, and thank you, Sal, for that great introduction. Okay, I'm Frank Landriel. I'm responsible for our distribution business. Quick background for me, I've been with AAR for 17 years, mainly in finance and operational roles. In 2012, I took on the OEM development role, which has actually helped me build the relationships that has aided to some of the distribution deals that we have, as well as helping AAR on the OEM side in total. Okay, from a distribution overview, key offerings. We distribute factory new parts on behalf of component OEMs to aircraft operators, government contractors, MROs, and we have also third-party logistics and other kitting and additional services to round out our offering. As Sal mentioned, we are a part of the part supply segment with just a little bit more than half on the distribution side. Within distribution sales, commercials, a little bit more than half, government following that, and then we have a small percentage of BAGA, which is the business and general aviation. That is a sector that we would like to expand to, and I'll talk more about that in a couple of slides. Within the commercial sales, from a fleet makeup standpoint, narrow body is more than half, with the remaining being split between wide body and regional. As for key customers, on the military side, the DLA, Defense Logistics Agency, is our number one customer. Japanese military defense is not far behind, a JMOD. On the commercial side, major airlines like American, Delta, United, as well as some large global MROs. Okay, so what do? Again, we distribute factory new parts on behalf of our OEM partners, and that's into commercial and also the defense market. On the commercial side, we use our global sales force, which is Chris Jessup's team here, and our warehousing network that you've seen on the map. It's a global network. It makes us close to our customers and close to where the action is. Additional services such as third-party logistics and kitting services on an as-needed basis. On the government side, key supplier with the DLA, and actually a step further than that, we have a strategic relationship in the Captains of Industry, which I'll talk about a little bit more in a couple of slides. And we also are a direct part supplier to foreign militaries. You saw on Chris's slide about all the foreign military spending that's gone up, but that foreign military is a sector also that we want to expand into. Now, as for our approach, we are an extension. We look at ourselves as an extension to the OEM. So what does that really mean? So that means our goals are aligned with them. Our KPIs are defined. That knowledge that the OEMs and that a lot of airlines and customers believe that only the OEM possesses comes over to us. We are trained. Our product line people are trained. Our salespeople are trained. We know when parts fail, how they fail, and what the replacement factors are. We work with our USM counterparts to make sure that we are delivering what the OEM is expecting, not overselling and not underselling. And that's the whole goal setting up front. We take a data-driven approach to analyze that demand. So that is part of the whole part forecasting. Main thing on forecasting is where to put the inventory, how much inventory to buy, and are we reducing lead times? And again, hitting those goals that we defined up front. As John mentioned, when we do this, when we partner with an OEM, their competition is our competition. Therefore, we will not distribute a competing product line. In exchange for all that, we ask for exclusivity. We go all in, and to go all in, you can't be competing us either. So that's it. The exclusive agreements we have a high concentration of them. Okay, as for our value proposition, some of this crosses over with the approach I just said, but basically goals defined. Goals could be anything from market share, gains, global reach, fill rate improvement, whatever it is. We define them up front. We take the data from our OEMs as well as our own ecosystems and whether it's our integrated solutions or whatever the demand looks like. We pull all that together and we create a profile. We work with our sales teams and our product line teams to make sure that we're not overselling ourselves or underselling ourselves and make sure it's achievable. We work with the OEMs from that standpoint. Then from there, we build our plans. We build our stocking, our inventory plan. And again, we work with our sales force to make sure that we can execute on that. With that said, independence is probably, you've heard it a couple of times now. Most of our component OEMs are on every airframe, so they're on all the competing airframes. And because we're not aligned with a particular OEM airframe or an airline, we're able to distribute right across the board without any conflicts. So it's a great advantage for us. When it comes down to AAR's flexibility, that's also key because not every OEM has the same goal in mind. So allowing us to modify our goals and our plans is important. Many of our OEMs, we actually distribute both on the defense side and the commercial side, which is actually an important value add, so that they don't need to go find another distributor to do their defense if we're on the commercial side or vice versa. And the overall financial strength of AAR is critical here because they know that when we sign up, we're all in and we're going to invest in, and our financial strength is important to accomplishing that. Okay, dig a little deep on the government value proposition. So our largest value add is reducing lead times. How do you reduce lead times? Your stock inventory. Again, data are very important. Getting the data, build the plan, and then strategically buying the inventory and positioning it in the right spot. So I'm proud to say that, as we all know, there's a lot of supply chain constraints and the OEM issues that are out there that are public. AAR's on-time delivery rate to our customer is double what the OEMs have been shipping to us. So that's confirmation that the plan works and that we're executing. I talked about the captains of industry. So we're the only non-OEM member of that captains of industry. So what does that mean? So there are OEMs that have captains of industry contracts and status. What's unique about us is that we're willing to invest in the inventory, add the additional services that are needed, which most OEMs won't. We're willing to work on multi-year pricing, contract that are multi-year, and that helps the DLA in many ways because it locks in today's dollars, even though we're shipping 2 and 3, 4 years from now, from the inflationary standpoint. So why is this growth for us? So with this contract in place, what we're finding is we have OEMs that again have a contract in place, but they're not going to do the multi-year pricing. They're not going to invest in inventory. So they're actually bidding with us. We also have OEMs that don't have a captains of industry, but this contract is somewhat unique. We could just add those part numbers and grow that way. So we're a conduit to that DLA volume. Okay, so I talked about commercial and military distribution. So many of our OEMs are even further widespread than that. They have foreign military, they have BGA. So those are critical markets for us. So the reason why we want to expand into these, and we're in these now, but we're not in any meaningful way. The reason why we want to expand to them is, again, be a one-stop shop for those OEMs, right? So sometimes they need us on the BGA side or a foreign military that could lead to the defense or a commercial business. So we want to be more of a one-stop shop with them. So with that said, so on the foreign military side, our focus is on the Asia Pacific region, geopolitical issues, as well as increased budgets. On the BGA side, main focus is USA. We did sign our first exclusive agreement with Collins on the de-ice, so that puts us in that space. It's a fragmented business. It requires us to enhance our parts store, and I'll talk about that in a second. On the electronic side, this is us selling to the OEM. So we're actually exploring that. It's a growing business for us, and this is where we could use our inventory capability and our planning and partner with them on a production side and how we ship to them from that standpoint, which actually in turn helps ourselves. Okay. So key achievements since last Investor Day. So we added new new distribution lines. So there's two ways to add a distribution line, of course. So do more with the existing OEM as well as land new OEMs. Okay, and we've got a couple of examples there: Unison, Raytheon, Parker, TransDigm. We entered new markets. Again, signing the DICE Collins product line. That puts us in the BGA market space, and again, looking to expand that. Increase efficiencies. We invested in our digital tools to take in some manual processes, automate them, the parts store that we've talked about, and we're looking to enhance that further for our next leg of growth. Our expanded service offerings. We need to be a one-stop shop. We can't afford to source out anything or have an OEM do a piece of what we're looking to do. We have to be all in, and we've added some of these services, and we will add others if need be to make it a complete one-stop shop. Okay, e-commerce. So this investment in digital tools, it starts out as an efficiency play, but very much turns into a growth play. So we invested in some of these manual processes that I just mentioned. We get sometimes huge, as an example here, we get sometimes these huge files from quote files from our customers through a third-party data exchange. In the past, it'd be a manual effort between our sales and product line people. Take a long time to actually respond. The hit rate was very, very poor. But with this auto quote functionality, which is the implementation that we've done and we funded, those auto quotes go out. It cuts down on the response time. Actually, hit rate goes up, and there's not a decision for them to go find an alternate part, but to come out and buy ours. What that does for us, it actually frees up our people to do what they should be doing, selling more and working with the OEMs. And it makes our customers easier to work with AAR. The last bullet here is the whole BGA customer base. So we talked about parts store. We do that today with our distribution business. It's a growing part of how we work with our customer base, but we're going to enhance it even further in order to deal with the small operators that are out there on the BGA market, or even the MROs that are out there, so that they could order parts right online and get delivery from us. And we will work on the planning with our OEMs on that. They have a lot of data. We have a lot of data, and we will look to add lines and, again, grow into that space. Okay, so this is an impressive chart. 300% sales growth over the last 12 years. This is just growing market share. So it's everything I've said in basically in a chart. So 12 years ago, to give John credit on this one here, we came up with a distribution strategy that was exactly what he said before. Work with a couple of key OEMs on an exclusive basis, and that basically started this. Some of the relationships that we have, you could see the trend here is in a good way. We just finished with a record year. A couple things I want to point out. You'll see Raytheon listed here numerous times, and that is expanding the base, right? So you land an OEM, you execute, and you continue to add new production, new distribution lines. Then you'll see new OEMs like Woodward on here. That's where you take that reputation that you built, everything that we talked about on the value prop, and you bring it to them, and they understand it, and then they sign you up. And then we look to now expand that. A lot of these are just one-off or a couple of product lines, so there's a lot of room for growth here. Okay, so growth initiatives. We want to keep working on what we're working on, right? Secure new distribution lines, whether it's expanding the base or new OEMs. Because we aligned with OEMs or an extension of them, their competition's our competition. I mentioned that earlier. So we will look for retrofit opportunities, however they want. This goes back to the goal setting. Whatever they want in order to grow, whether it's retrofit, whatever, we're there to help them out. Again, expand into foreign military budgets, increasing everything else. We're going to start with APAC, but that's an important part of, again, being more connected to our OEM partners. Same with the next one for the BGA, even though that involves a little bit of investment on the tool side of it, on the digital tools. It's a compelling business case, and there's a lot of room for growth in that segment too. And then expand e-commerce overall. We're excited about this Trax acquisition. They bring that's another channel to sell parts. That's what we do. We sell parts, so we're going to tap them, work closely with them, and figure out how we could bring that volume and that customer base into our fold here. So, in conclusion, we had a great 12-year run. I'm actually even more excited about what the future holds and all the conversations we're having with our OEMs, adding these new markets and adding the e-digital, and especially with Trax. Okay. Break.
Thanks, Frank. With that, we'll take a 10-minute break, and we'll come back and we'll hear about integrated solutions, repair and engineering, and Trax. Thanks.
Okay, we're going to get started. Everybody wants to grab their seats.
Thanks, Tom, for getting
Get
control of
everybody
this
back.
room.
Yeah.
Okay.
Give everybody, I think we got a couple people out there. Okay, we'll get started. So welcome back from break. I guess I said thank you for coming back from break. It's now the job of me and my colleagues to make sure you're happy with that decision. So we'll get going. So Repair and engineering. So my name is Tom Hofer. I joined, in contrast to my colleagues who have talked about their years of experience at AAR, today is my 2-month anniversary. So I wish that meant I was just out of college, but I'm obviously not. So 30 years of aviation experience. So I came from GE Aerospace, got to know John, the team, and AAR from the relationship that you've heard Unison mentioned previously a couple of times. Also did 22 years in the Air National Guard, and again, culminated my GE experience at Unison. So enough about me. Let's get to repair and engineering because I got some really cool stuff to talk about. So what do we do? First of all, we are the #1 independent MRO in North America. We do airframe heavy maintenance. You can see in the pie chart on the right, that's the bulk of our sales, right? About 2/3 of our sales comes from our airframe heavy maintenance. In addition to that, we do landing gear overhaul. We do it in Miami facility, separate from our hangar. We do component repair here, I guess, somewhat locally in Long Island, also in Amsterdam. Interior mods, engineering, design, all the way through certification, STC certification. And John talked about our PMA parts. So a new business we're starting, a lot to talk about there, and I'll get to that here in a few slides. So that's manufacturing, engineering. But beyond that, the other key activity is, the war on talent, right? So managing relationships with our 8 Eagle career pathways. Sorry, I'll talk a lot more about that. But this is about bolstering our labor pipeline, right? If we don't have quality, reliable labor that we can retain and keep and continue to grow, we'll be in a really bad place. So labor is very important for us, not unlike anyone else in the aviation industry. But we are leading the industry in several programs that we're running to make sure that that doesn't become a bigger problem for us. Okay, you can see this breakdown of commercial and government, and then we are anchored on those key customers to the right. Some really big names in the industry. We're focused on them, and I'll talk a lot more about what that means from an operational standpoint. And then the U.S. Air Force, U.S. Navy, of course. So what do we do? Airframe MRO, 6 hangars, Miami, Oklahoma City, Indianapolis, Rockford, Illinois, in the United States. We also have 2 MRO hangar facilities in Canada, Trois-Rivières, that's 3 rivers, no need to use Google Translate, and Windsor, Canada. So all in North America. Heavy checks we do roughly every 2 years for those for our customers, but we're really nose to tail, right? Things happen in aviation, right? Hail damage, ramp damage. We get quite a bit of drop-in, so we're nose to tail, lines of maintenance at all those facilities. We support primarily narrow body Airbus, right? Focused on Airbus and Boeing, I should say. So narrow body. And then we also do work on regional aircraft with Embraer 175s. Moving down the screen, landing gear, full service repair on landing gear, wheels and brakes on pretty much every commercial government aircraft type you could think of. We also do a lot of internal, our special processes are in-house, right? So that insulates us from the noise, if you will, in supply chain. Also allows us to maintain our cost of those special processes that our competitors have to farm out. Component repair. We do component repair again here in Long Island, also in Amsterdam, over 15,000 components, ranging from APUs to starters to valves. And as you can see, quite the list there. So a lot of work being done with component repair. And then finally, engineering, which really covers 2 pieces of engineering. One, engineering services, which you've heard us talk about in the past. So that's our team that does design, integration, cabin mods, galley reconfigurations, what have you, and takes it all the way through certification. And then PMA parts development. Again, this team right now working on candidate identification. As I'm sure you all know, there's not a shortage of ideas, candidates that we and our customers would want to do PMA. But we've always got to balance that with Frank's business, with our OEM customers, right? We're not going to do anything that conflicts or infringes, if you will, on the importance of those OEM relationships. It's a key factor in deciding what we're going to do PMA on. Okay, so this is the facility overview. We talked about the hangar sites. We have over 12 sites, 3,300 employees. I'm not going to bore you with all the small print on the bottom, but really the takeaway is this. John talked about focus. I translate that being a kind of a lean guide to standard work. Right? Standard work on narrow body aircraft, right? It helps you improve your safety, helps you improve quality, helps you improve delivery, and helps you reduce your cost, right? So those things are all great benefits out of an operation where safety, quality, delivery, and cost are how we are successful. So I think John said, hey, an employee that comes in and knows he or she is going to work on a narrow body day in, day out for that customer makes things a lot easier, right? It leads to a lean operation. So our value prop, 6 main tenets of that. Large network. I talked about the network of 6 hangar sites. Gives us flexibility with our customers. Again, with a smaller group of anchor or strategic customers, we can be responsive to their needs. Again, things happen, right? Customers need different things that weren't planned. We can adjust with them, flex to them. We're doing it today with the increase in demand, with the crazy weather you see in different parts around the country. We can react to that with our flexibility with, again, a smaller group of customers with a focus on narrow body. Vertical capability is creating one-stop shop. So I talked about how we do that with landing gear, but beyond the landing gear and the special processes that we do in-house, even in hangars, we do our own composite work. So again, insulate ourselves from the noise in the supply chain, manage cost. Quality workforce, again, this is something we think about every day. It is something we got to keep our finger on the pulse of. I'm going to talk in a few slides here about what we're doing in regards to that. But we're proud of the workforce we have. We have about a 75% retention rate. It's good, not great. I say it's really good for this in the MRO world. But there's a lot of competition out there for our people. Innovative design, PMA part solutions. I talked about that with our engineering work in Indianapolis and Singapore, and then our PMA parts, which I'll talk about a lot more here in a couple slides. Digital. So Frank, Sal talked about what they're doing in their business in terms of digital technology. Repair and engineering is no different. I'm going to share with you a really exciting project that we're doing around paperless MRO. If you've ever been through an airframe MRO, you know it is insanely manual. There's an insane amount of paper. We're working on a paperless MRO project, the first one in the industry. Share a little more about that here in a couple slides. And then material sourcing from a parts supply. Again, my friends Sal and Frank, we leverage our internal colleagues to get parts when we need them. But beyond that, the team's done a really good job in the past probably year or so, 6 months, year, of consolidating the buy that we do across hangars, right? And I know it sounds simple, but if you buy the same widget in Miami, Oklahoma City, and Rockford, you really ought to buy it one time and get that cost benefit, get that delivery benefit from a very stressed supply chain. So a lot going on there. Okay, since 2019, so the skilled workforce, I talked about our retention rate. Again, this is literally a daily battle, if you will. I make sure we stay focused on this. It is incredibly important to our success. Optimizing the footprint. So during COVID, we divested of our Duluth MRO facility and grew Rockford from literally 50 employees to over 300, I think now. So that's the optimized footprint. Rationalizing product lines really takes me to bullet 3. Again, back to that focusing on standard work, narrow body, airframes, and key anchor customers. And then 4th, safety. Quality first, safety always. John said at the beginning, it is just part of our ethos, right? And we're really proud of the fact that AAR was the first corporate level approved safety management system by the FAA and subsequently by EASA and TCCA. So following that, we've implemented it at all 6 hangars. So what does that mean? It means that if we have a safety, quality, compliance type issue at any of our sites, that issue is known literally instantaneously within our digital system by everyone. So you can contain the issue, and then you drive root cause corrective action where it happened, but that's all shared with everybody across the entire business. So we're not getting repeat safety, quality issues across the business because we're not talking. We're communicating every day, review all the open issues every week, every month. So safety and nothing more important than that. All right, let's talk about people. So workforce development. I mentioned this Eagle Career Pathway Program. That's really the center of multiple programs that are going on. Can't take you around the whole circle there, but I will highlight a few. So being a veteran, the military skill bridge is very important to me. we tap into veterans that are exiting their service and try to get them into AAR, right? Great experience, great background. Legislative initiatives. This is really important. Local, state, federal level, ensuring that our legislators are talking about funding at their respective levels to make sure that we're funding training programs that allow us to go into schools, talk about aviation as a career, get kids interested in it and create that pipeline. It might not result in someone walking in the door tomorrow or next year. But the reality is, I was listening to an Aviation Week MRO podcast. The average age of the AMT technicians in the United States is 54 years old. That's a problem for all of us, right? So you got to create that pipeline now so that we have labor in the next 5-10 years. And then the other one I'll highlight is our state grant program. So we're just finishing up a $5.2 million grant from the state of Illinois, which again enabled that growth I talked about in our Rockford facility. And we're super excited to announce about maybe 2-3 weeks ago that we received a grant from the state of Indiana for $4.5 million. So we use those dollars. There's very few dollars left out of that $5.2 million. And I'm sure we'll use every bit of that 4.5 to make sure that we're doing, again, all the right things that we need to continue to grow the future of labor in Indiana, specifically for Indianapolis, but really across the entire business. All right, super exciting news this week. I think we had maybe 2 or 3 press releases on this. We're so excited. Barry couldn't quit typing up press releases, but for good reason, right? So expanding our Miami footprint from 9 bays to 12 bays, right? Easy math, 33% up. Most importantly, 250 new jobs in that area and customer commitment. So look, there's an equation to doing this, right? You got to have the local support of the airport, Miami-Dade in this case. You've got to have support of local legislators. The mayor of Miami was very instrumental in our discussions. And then third, you have to have customer commitment, right? We as a business can't commit to this kind of investment without knowing we have customers to back it and fill those bays up for years. Chris and his team were able to secure a long-term commitment from United Airlines through 2030 to make sure that when we build these 3 new bays, there's going to be planes in them, right? And generating new business for AAR and serving a customer need. United's got the demand for it. So we're going to break ground here in Q2. It's not a small investment of $50 million. So big decision for us to be met to get across the finish line. But most importantly, what I really want to leave you with is this is the first, right? So that equation I talked about, local airports, legislators, customer commitment. Stay tuned to your laptops. We're working on a couple more that are coming just like this. And great reason to be excited about our growth. It's going to be awesome. Paperless. Again, I talked about just the amount of paper in an MRO hangar is ridiculous. So we're working on this. We're running through a couple pilots. As with any software development, digital project, you launch and you learn a ton, right? And then you make changes. So that's where we are with this. The complexity of this is it's new for everybody, right? Again, we're the tip of the spear on this, meaning we're working with, customer quality departments, working with the FAA. So this will require us to run dual processes as we launch this, meaning we'll have to continue to be manual while we're showing that we can do digital, right? So moving as fast as we can. It's not easy because this is changing the industry, right? But we're leading it, and we're going to make this happen because huge opportunities in terms of efficiencies in our shop, as you can imagine, and cost to help us meet our margin expansion goals. PMA. All right. So this is a part of our strategy that is really, I say it's still at the beginning stages, right? This is about us looking at how can we do PMA that helps us reduce our internal cost. Okay. So that's where we are now. Again, no shortage of a list of ideas or candidates, but we got to make sure we're not doing something in conflict with our other OEM relationships. Okay. We've got a team stood up, got a leader of that team. So we're resourcing it. We're funding it. Again, balancing it with, a lot of optimism, a lot of bullish behavior from the team of what they want to do. We got to balance it with what makes sense for AAR. But where we want it to go is to eventually partner with customers who also want PMA, right? and help them help us, right? Or I guess help me help you, help me help you. Uh, but we get one way or another, we'll do it together. How's that? But the point is, we want customers to provide that pool of, hey, this PMA this part is a problem for us, right? The cost is an issue, the delivery is an issue. Can you PMA this? That will allow us to really take this PMA business to a whole different level in the next, 5-10 years. So super excited about this opportunity. So in immortal words of Tim Buck 3, the future's so bright, I got to wear shades. Unbelievably cool stuff going on in repair and engineering, right? We're going to keep expanding airframe MRO. Like I said, Miami is just the beginning of the story. Paperless is just the beginning of our digital investment. John briefly mentioned drones. This is way cool stuff. Drones flying around the airplane, doing the surface inspections, right? Eagle Career Pathways program. Like I said, labor. It's something I go to bed and wake up, thinking about. So we'll keep working at. We're leading the industry on these programs. We'll continue to stay in the lead. PMA Parts Initiative. Talked about that, and then the final one around component repair. I talked at the very beginning. Hopefully, you remember about 15,000 different component repairs we do. The playbook that Frank talked about in terms of distribution, right? Focus on a few or a select group of OEMs. The playbook that we ran on airframe MRO, focus on a small select group of strategic customers. We're going to do the same thing on component repair. I don't know that 15,000 repairs is the right number. I don't know if 7,000 is. I know that we got to focus on customers that want our product and where we can be the best at delivering it. So that'll help us meet our mission. We're the number one independent MRO today. We want to stay that way. So thanks for your time. I will now introduce Nick Gross.
Good morning, everyone. I am Nick Gross, and I have the pleasure to lead and present the Integrated Solutions Business Unit today. So you've heard a lot from my colleagues about all the great, vast capabilities that AAR provides, and our group really integrates those into comprehensive solutions for government and commercial customers. Our key offerings on the commercial side are Power by the Hour and Repair by the Hour component support. And then on the government side, it's everything around that term, contractor logistics support, which spans supply chain, maintenance, and even some cases, flight operations. Our business mix is about inverse to total AR. We're about 70% government and 30% commercial. But across both sets of businesses, we have really focused on a core set of platforms that are globally prevalent and will be relevant for many years to come. Our customers on the government side are, the government, right? Department of Defense, Department of State, Department of Energy, many of our allied foreign partners. And then on the commercial side, we support many of the marquee airlines, Air Canada, Air New Zealand, Fly Dubai, and many other operators globally. One thing I want to point out is kind of how we're contracted. So, we're called Integrated Solutions. It's a fancy term we came up that sounds better than programs, I guess, but really we're programs. All of our work is done under that programs. Longer term programs, our average tenure is about 5 years or longer. We have some programs that extend past 10 years. And that gives us a tremendous amount of visibility, frankly, and predictability into our business. And realistically, as long as our contracts are performing as expected, this business unit should deliver a known annuity year over year. So again, we integrate or bring together deliver a comprehensive set of services and solutions to our customers worldwide. All these functions on the slide really integrate and kind of blend together. So I'm going to talk about them a bit more holistically. But if we go back to that broad umbrella again of contractor logistics support, which is supply chain maintenance and flight operations, everything we do enables some aspect of that. Now, how we go to market, how we support that, the level of support is different amongst the different groups. For example, on the government side, we touch that entire value chain, right? The full continuum of support. We can offer that service or that capability on a very individualized basis or wrap them together into more comprehensive solutions. And the commercial side, we primarily focus or really only focus on supply chain enhancement, again, through our Power by the Hour and Repair by the Hour solutions. One thing I do want to point out is while, you'd say, okay, government, commercial, that's kind of different end markets. They are different end markets. We do support different customers, but how we operate is actually pretty similar. If you think about how we would operate a commercial Power by the Hour contract for a commercial airline, it is very similar to how we would operate a performance-based logistics contract for the DoD. So a lot of the functions and operations are similar amongst the group. Supply chain does account for the majority of what we do and the majority of our business. And that ranges from everything from 3PL operations, where we are managing warehouses for customers in accordance with their, SOPs, their systems, whatever it may be, to more advanced PBLs or PBH type contracts where we take over the entire supply chain and we're responsible for point of use availability basically to our customers worldwide. I realize we have a lot of acronyms in this business, so I'm trying my best to spell them out. So please raise your hand if you want me to spell any of those out. But we think someone mentioned GOCO and COCO earlier, right? And in government, we have a lot of acronyms. We think we're at our best when we can really take control of that entire supply chain, enhance that supply chain over time, and create value for our customers long term. A fantastic example of this is, many may be aware, if you follow us, we were awarded a landing gear PBL contract a few years back where we took over responsibility for the entire supply chain for the KC-135, C-130, and E-3 landing gear systems. These are very, very old aircraft. They had a very, very old supply chain with numerous constraints. In the course of our time on that contract, we've been able to reduce MICAPS, which is the commercial version of it, or the military version of an AOG, by 92%, back orders by 93%. We were actually recognized and awarded, or recognized for effort on that contract and awarded the Secretary of Defense PBL of the Year award 2 years ago for our efforts on that contract. Many of our contracts also include a maintenance component, and that does include line maintenance, where we're working on. And the line maintenance side is, I know Chris said we don't really play on the commercial side, but we do on the military side, where we're working on aircraft basically around the world for our customers, up to traditional depot level maintenance, which AAR is traditionally known for. It's important to note that we do a lot of our work organically. However, the fantastic and great thing about AAR is we're able to tap into other businesses. And in this case, for example, in the depot work, we utilize Tom and his group to do a lot of the depot maintenance as part of our integrated offering to our government customer. At the end of the day, though, all of our solutions aim to increase readiness and decrease the cost for our customers. Our mission at Integrated Solutions is to be the leading independent provider of aftermarket sustainment services, and that's leveraging the full spectrum of AAR's capabilities. Our end goal is not only to provide exceptional service, but it's also to make it as easy as possible for customers to work with us. And that mindset really guides our operating philosophy. Every program is a little bit different, but understanding our customers' problems and solving those problems is ultimately how we add value. Again, every program is different, so how that value is created is a little bit different, but there are fundamental themes that underline and or basically contribute to everything we do. The first is our blend of commercial and government. Our position in the commercial and government markets brings us a unique perspective and an operating philosophy that very few others have. The word and the term commercial best practice has been around forever, but frankly, it's widely overused in the government space. A lot of people that like to say that term have frankly never done any true commercial work. We grew up in the commercial industry. We grew up in that commercial pedigree. Everything we do, every approach we have is with that commercial mindset. And our ability to tap into the best of both of those worlds and offer our customers, whether it be a government customer or a commercial customer, a unique tailored solution that blends both of those pieces together is a true competitive advantage. Again, our ability to tap into Sal and the used service and material group, or Frank in the distribution, and Tom in repair and engineering, allows us to offer solutions, frankly, that no one else quite can. Our close to the customer and global presence is a critical component to what we do. At every hour, at every day, one of our employees is supporting our customers. We are time zone agnostic. We routinely pass work off between different offices to make sure that we meet those 24/7 requirements of our customers. Not only do we operate locally, but we stock locally. We forward stock close to our customers to meet their changing needs, reduce overall lead times, and improve service levels, and ultimately improve customer satisfaction as well. While every program is a little bit different, our strength is being able to develop tailored, global, deployable, scalable solutions for our customers anywhere they may be. Our role as an independent is important because it allows us to be OEM agnostic and really deliver the best possible solution for that particular customer's need. Again, if we think about legacy aircraft, we specialize in supporting legacy aircraft through their user or owner-defined end of service life. And this requires us to create innovative and enduring supply chain and engineering solutions to mitigate obsolescence, and at the same time, make sure that we deliver the right part at the right time. And many times, this is far past when the OEM has decided to shift their focus to new and emerging platforms. So if we think and reflect on the last few years since we last met, there are a few achievements I did want to highlight. AAR has traditionally been known for our support in the commercially derivative market, and rightfully so. We do so much of it, but we have continued to push further and further into supporting traditional military aircraft. One great example of that is the stand-up of our F-16 depot in Poland, which I'll speak a little bit more about. But here we saw an opportunity to support an underserved market that fit very well within AAR's traditional operating philosophy. Another thing I want to highlight, and you've heard a lot about the NDAA, but the FY23 National Defense Authorization Act and the legislation that directed the acquisition and use of used serviceable material. We have been, if we go back, and this is something that I think we've been passionate about for, a decade, if not longer, about trying to encourage the DoD to utilize USM in a more robust fashion. We have worked closely with our elected officials, frankly, in the services to educate them on the benefits of USM. And we are extremely pleased that that became part of the legislation this past year. And that change of mindset is not only at the part level, but at the whole end system level. And you heard Sal talk a little bit about this, but we're seeing this change in mindset too, where government end users are starting to consider used alternatives. In the last 2 years, we have sourced, acquired, modified, and sold 6 whole aircrafts to different government end users. Each one of those was a little bit different, but they all demonstrated the power of the aftermarket in the sense that in every single case, the used alternative provided a lifetime or a lifespan longer than customer requirements, delivered significant cost savings, and greatly reduced lead times versus new alternatives. And there's very few, if any, other companies out there that could provide that turnkey. And if you think about that, can go out, source, evaluate, acquire aircraft, engines, landing gear systems, can modify those aircraft, maintain those aircraft, and then deliver them in accordance with very strict government requirements. Again, this is something I think that's unique to AAR. And one thing I do want to point out too is we don't believe this is a point in time. We do believe this specific market will be enduring. And then finally, like many others on the commercial side, the pandemic really caused us to go and examine how we supported the commercial PBH market. Prior to the pandemic, that market had become hyper competitive, subsequently driving down prices and ultimately margins as well. So as we looked at our portfolio of business, we rationalized our portfolio and book of business around fleets that we knew and customers and contracts that we knew and liked. By rationalizing around a core set of fleets of aircraft that we knew and ones that we had inventory position on, it allowed us to better refine our operational process to support them. Now, we are still one of the largest PBH providers worldwide, but we're much more focused and thus more profitable. And as we look to go forward, frankly, we're much more selective on the type of opportunities that we want to pursue in that market. I did want to highlight, I mentioned the F-16 depot in Poland, and this is I think a great example that ties to exactly, some of the things we talked about the last few years about pushing more into that kind of military specific support. But we stood up this depot in support to support a contract that we won for the Air Force to support their European fleet of F-16s. Now, if we go back a few years, we saw a gap and frankly, a huge opportunity. As more companies shifted focus to the new and next generation aircraft, at the same time you had the US government commit to the F-16 well into the 2040s, if not beyond, we saw a supportability gap. That is exactly the type of environment that AAR thrives in. We combined our extensive depot experience with our knowledge on the airframe gained through our component repair facilities and created an innovative solution that could support the Air Force's need long term. In 8 short months, we stood up full operations there. We currently have or will have our 7th aircraft inducted, and we expect to be 12 by the end of the year. More importantly, we expect customer demand to be strong for this over the course of that 10-year contract. Again, this is important because it tied to our strategy to get into the more military-specific airframes. But to support this, we had to build an infrastructure of subject matter experts across a wide variety of technical, engineering, and artisan functions to support these operations. And that's important for us because it gave us the capability and capacity to continue to grow, frankly, and add more government work and foreign end users. We believe, and our desire is for this location to actually be our regional center for F-16 maintenance and training going forward. A lot of talk about the NDAA, but I do think it's important because we've mentioned it and how great it is, but I do think it's important, and I wanted to add a little bit more color on exactly what this means for us as an opportunity. Well, you've heard Sal and John and many people talk about used serviceable material across the commercial industry. The use of USM in commercial aircraft and engines is commonplace. Sal and his team are market leaders there, but unfortunately, it has not been that widespread across the DoD. The FY23 NDAA changes that and directs the services, specifically the Air Force and Navy, to develop policies and procedures for the use of used serviceable material in all commercial derivative aircraft and engines. I put this chart in here so you can see this is not all the linkage between the two, but if you look at the linkage between the commercial derivative and the military aircraft and engines, I do want to point out that that whole list right there are products that AAR knows very, very well. And frankly, product lines that Sal and his team support very robustly in the commercial marketplace. We conservatively estimate this to be a $200 million plus annual market that, because of our leadership in the commercial marketplace, we believe we're very well positioned for. Frankly, we're already seeing some of the impact of this legislation. If you talk, someone mentioned the KC-46, but the Air Force recently awarded a contract to support the provisioning of the initial spares to support the ramp up of the KC-46. As part of that, they allowed USM as the source of supply, which was unique. AAR was awarded a seat on that IDIQ, and we're now starting to see task orders be released. We also expect the DLA in some fashion to be involved either in the procurement and stocking of USM. And because of our operations, our performance of the DLA Frank mentioned, we believe we're also very, very well positioned should that become a reality. So, as we look to go forward, we are energized and optimistic, frankly, about the opportunities ahead. There are a few key critical components to our growth that I do want to just briefly discuss. First and foremost, we're programs. We have to continue to secure long-term commercial and government contracts. On the commercial side, the market for PBH services remains high. Frankly, we didn't know how that would be with the pandemic, but coming out of it, that market is still extremely high, and we still remain a key player in that market. While we have rationalized our portfolio of business around, a core group of fleets, the fleets that we are supporting are some of the most relevant most prevalent, currently in service. And our role as an independent is important because it allows us to aggregate without restriction. On the government side, we continue to maintain a market-leading position supporting commercially derivative aircraft and continue to push further and further into military-specific airframes. While we have been successful, such as the F-16 and some others, we need to continue to add size and scale and leverage the capabilities and the experience that we're gaining on that program and others to really springboard us to other platforms and other capability sets. Spoke a lot about USM, and now that the legislation is passed, now we have to make sure this becomes a reality, and all the great things that we believe will happen. And we've been working very hard, and the teams are working very hard with our government stakeholders and service members to educate them on what exactly USM is and how best to use USM. You'd be amazed at how many people don't even understand what that means and how best to use it. So we've been educating them on where there are opportunities, frankly, to use USM and how to implement that as a source of supply. A lot of my colleagues talked about government, right? I think Sal had a piece on, one of his key growth items is try to expand more on what he's doing on whole airframes. Tom's talking about his piece of the government. And frankly, no one brings together all the pieces of aviation quite like AAR does. And our ability to combine those into comprehensive offerings to support government and commercial programs or government commercial end users is something that no one else can do. That is a true competitive advantage for us. And if we look over the last few years, what we've been able to do to bring these other pieces of AAR, which have traditionally not played in the government end market, has been pretty remarkable. And frankly, we see tremendous opportunity for that going forward. And that not only creates obviously opportunities for integrated solution, but broader internal opportunities, which creates a more competitive and profitable total AAR. I will digress one piece here and say that for me, that's okay. John listed all those awards that we had in the front, and I think they're great. But as a leader of this organization, a leader as a business, I don't think I've ever worked for a place where you've had such a cohesive leadership team. A lot's due to John and the culture he's created that every day comes in, does not worry about their individual P&Ls, but is always concerned about what is best for AAR. And that is such a refreshing place to work, and I truly appreciate it. And finally, yeah, it's good. Finally, one thing I will say is that, and I will say too, it's funny because we all have this Trax piece on here, and I swear this was not planned, but we are really excited about the Trax acquisition. On the government side, you will see, because they're going to come up next, the AAR logo. We've actually used Trax in a couple of our government CLS programs, and in fact, we believe their functionality is very well suited for what we do on the government side. In fact, even prior to the acquisition, we have been working with Trax like a partnership to help enhance their product to be more suited for that traditional government type work. But at the end of the day, we'll continue to invest on both commercial and government and products and services that give our customers the access to real-time data and enhanced visibility to give them, frankly, unparalleled visibility into our operations and their operations. The client-facing products that we've created are and will continue to be a differentiator for AAR. So again, I'm excited. I believe we built a very, very strong foundation of key contracts, marquee customers, and top talent to propel us forward. Thank you for your time, and I'd like to introduce Trax and Jose, or excuse me, Andy and Jose from Trax. Thanks.
I'm interchangeable.
Yeah.
It's always been our way. Well, good morning, everybody. My name is Andrew Schmidt, and before I introduce myself, I'd like to introduce Jose. And by the way, Jose is the cool-looking guy. If I can get this to work, on the left side of the page, I'm the boring-looking guy on the right side of the page. Jose is the founder of and CEO of Trax. Elated to have him here. This is a courtship that has been going on for about 10 years. We've talked, this is John, myself, and Jose have had many dinners. We've had many meetings. We've had many outings and have gotten to know each other. A lot of our conversations, of course, center around software, mobile computing, and AI, and the transformative power that the three of them have in aviation aftermarket services. We've also, and this is the fun conversation, really talked about the transformative power that a combination of AAR and Trax could have on both AAR's customers, Trax's customers in the industry together. So the synergy being the combination of software, Trax, and hardware, AAR. So it's something we're going to talk about here is why does this make sense? What's the synergy between the two companies? Delighted to have you here.
Thank you very much.
We're here. So a little bit of background on Jose. He founded the company in 1997. That was a long time ago. At that time, computers were run on green screens. There were no graphics. Can you believe that? No graphics. It was just a screen and a bunch of text. Jose, being the innovator that he was back then, actually tried to convince somebody else to do this. They wouldn't do it. So Jose said, why don't we come up with Windows-based software for aircraft maintenance, way ahead of his time. And so Jose, thinking that was a good idea, quit his day job. He was a programmer. Went off, he formed Trax, and then he started coding. And he still codes to this day. He was showing me code yesterday, which was a little bit scary. So he's quite good at this. He does the debugging for the company. So Jose founded the company, actually did roll out in 1998, the first version of Trax. It was fully Windows-based, was ahead of its time. He quickly built a customer base, and for the bankers in the room, he did not require any external capital. So he funded the company from the beginning. Well, it didn't require much funding since they live in a very small place. But anyways, the company formed, gained momentum very quickly. Everybody liked the intuitive user interface, particularly small and mid-sized airlines as well, who found his software much easier to implement, much more economical to implement than some of the other bigger solutions that were out there today. So continuing to innovate, after releasing the 12th version of Trax, Jose began working on the industry's first 100% cloud-based MRO ERP, meaning you didn't need to have a big data center. You didn't need to store your information in a proprietary center. You could basically store all the information associated with doing maintenance on the cloud. You could access it readily. You could access the software readily. So he launched that product in 2015. And while building eMRO, he began pursuing building complementary apps, mobile apps that would work with eMRO. And as he started building those apps, he kept coming up with new ideas. So we need an app for a mechanic. We need an app for somebody in the storeroom. We need an app for somebody in QA. And ended up designing 16 different apps today that are role-based. So now a mechanic comes in, they don't need to go through 6 screens on a laptop or a desktop to figure out what they need to do. They fire up the device, it tells them exactly what they need to do for the day. If they're working in a storeroom, they don't need to print out a list of things that they need to pick. They fire up in that case, the iPhone, and it tells them exactly what parts they need to pick and where they need to go. So that innovative product came out in 2016. Started off, I think, with about 12 different apps, up to 16 today, and building an app today. So his latest innovation, and this is something he started working on before we purchased the company, is automating maintenance. So taking AI, machine learning, and not making that the product, but taking that and embedding it into the software. So he's working on a suite of new products that are AI-based. It'll be a pro series of products that we hope to begin rolling out later in AAR's fiscal year, and again, probably roll them out one at a time. They'll bolt on to eMRO. They'll bolt on and work with eMobility. Not sure if they're going to bolt on to Trax, legacy Trax, or not at this point in time. So an innovator, in terms of myself, we'll do this very quickly. I started off as a flight test engineer, went to business school like many people did. We wanted to transition careers. The first half of my postgraduate school career was spent in consulting. Was a partner with A.T. Kearney, was also a partner with Oliver Wyman. The second half of my career is when I got into investment banking and private equity and working with John Holmes at AAR. So I was at AAR from 2010 to 2018, and then recently came back after the acquisition of Trax. In terms of the company, John mentioned this earlier, but just important to note the breadth of what Trax does. So Trax's software supports 100% of what an airline, an MRO, government and defense aircraft operator needs to do to maintain their aircraft and maintain all of the components that are required to fly and support those aircraft. So software does 100% of what an airline needs to do to maintain its aircraft. The reason I say this is big customized legacy ERP systems will do this. There are a couple of Trax's competitors that can do pretty much everything, maybe one or two. But there are a lot of different software companies out there today, and what we are beginning to see is a consolidation in this marketplace. So to be a player, you have to be able to do everything. Just doing one thing or two things isn't going to cut it anymore. The integration cost is too high. So moving on here. So that's the quick overview of Trax's software, and Jose is going to go through that in more detail. So then looking specifically at Trax, so it supports commercial airlines. It does have some government and defense customers. It's working with the FAA today. It does have some OEM customers that support government programs. And it, of course, works with MROs. AAR is a customer. Sabena Technic is a customer. SIAC is a customer. Turkish Technic is a customer. 138 customers, 35 countries. Average tenure of its customer is 10 years. Its products, of course, ensure that an airline is compliant and they can get their work done, and that an MRO can get their work done. But they also increase the efficiency of maintenance processes, increase the efficiencies of the mechanics, the storeroom clerks, the engineers, and so on. In addition, the software helps maximize the utilization of assets, could be aircraft, inventory, people, helps maximize the utilization of people and ground support equipment and so on. The software creates the system of record for an airline. For anybody who owns the aircraft, this is key. It's the system of record. It's important that you know where all your parts are, where they came from, what their history is. Trax's system allows their customers to do that. Based in Miami, 110 employees. Over on the right, talked a lot about this already. 3 core products, eMRO, eMobility, and Trax, which is the initial product. eMRO, 21 modules. eMobility, as I mentioned, 16 apps and growing. In addition to those three core products, Trax offers services to help their customers implement, to help their customers get the most out of the software. They support the software 24/7. Customer has a question, they can write it in a log, they can email, they can call, get in touch with Trax in a whole bunch of different ways. And they also customize the application for a customer if they have a special process that they want to support or a special look and feel that they want to have. Last service to note here is hosting. Trax started hosting its software in 2014. This has been a high growth product for the company. And the reason is, as Trax's customers have moved off and out of their data centers and into the cloud, some of them have used third-party cloud hosting services. It hasn't gone well. So in addition to hosting the software, you have to maintain all the interfaces with other software applications that interface with Trax's, like SAP. For finance, you might have an HR application that needs to interface with Trax. What customers have found is when Trax hosts them, they also take care of those interfaces. So if something happens with an interface where it's upgraded, et cetera, Trax can handle it a little bit better. So over the last 3 years in particular, it's been a high growth item for us. So then looking at competitive advantages, it's web-based. You can access it anywhere. Your data stored in the cloud, secure, easily accessible. It's mobile and role-based, makes your workers more efficient, supports paperless operations. We've talked about that a couple of different times. Trax implemented its first paperless operation at an MRO in 2016. It implemented its first paperless airline, Breeze, 100% paperless. Didn't have any printers in the hangars, didn't have any printers with the engineers. 100%, that was implemented in 2018. So it's installed its mobile apps at 26 different customers. Not all of those customers are 100% paperless, but many of them are. And then it has offline capability. So a key part of being paperless is this needs to work when you're not connected to the internet. It needs to work when you're not connected to the internet. So it's used on aircraft by pilots. It's used on aircraft by flight attendants. It has to work if their internet service goes down. Same thing with mechanics. If mechanics are in an airplane, if you're a storeroom clerk and you don't have access, you can still use your app. You do your work. When it gets back online, everything syncs up. So that's the product. And Jose?
Okay. Well, thank you, Andy, for your introduction. And again, I'm very, very excited about our partnership. I would call it a partnership because we know each other for so long that it's a good feeling to be here between AR and Trax. Again, we call it when hardware met software. And this is how we always talked about this, hardware, software. Again, normally I apologize because my presentation is going to be a little bit boring. It's a techie presentation. I brought it in. But there are two groups of people that normally don't find me boring. They're programmers and financial people, because they know the profit margins that software leaves behind. So I do get that today I want the jackpot, because normally I go to sleep and I'll wake you up. But again, I'm going to make it very painless for you today. So again, like Andy had said, eMRO, the center of our universe, 21 modules. Again, modern. Since day one, this is what I always want to be, ahead of my competition. And as you'll hear a little bit, way ahead as we are today. Again, from EDI purchasing, material management, technical records, engineering, planning, QA, production, financial management, we do it all. When an airline or an MRO comes to us, we are everything in that organization, which makes us extremely sticky. That's why we're there for so many years. Again, development time, as you know, on any of products takes time, but once you get it out to the field, it becomes, we become the heart of that organization. And you will hear names as we're going in the next slide, and what our future and how we see our partnership within AAR benefiting not just them, us, because as being an enormous player in the industry, we needed that to take us to the next level. Again, as we see here, all of those 21 modules in eMRO also interact with something that nobody has in the industry even today. We started 6 years ago with mobility, offline capabilities. We were the first ones to do this in the industry. We thought, hey, our competitors are going to come back after us. Well, it happened the same thing as our e-mobility, eMRO platform. When we said we're going 100% cloud, we thought the major competitors are going to do that. No, they're still doing what I did 20 years ago, Windows-based systems, and they're trying to patch it up. But again, this gives us the advantage. We are the only standalone software in this industry. you guys, AAR, was the only standalone company. It made perfect sense. Our synergies between both companies and our people work great together. Second, all our apps are optimized for paperless operation. Like Andy said, hey, we've been doing this for a long time, and we're embedded in 138 airlines worldwide, 35 countries, as you'll see in the next slide. And third, like I said, our competitors are now promising this type of software in the future. We've been at it already. The next generation of projects, 6 years. So 6 years ahead on all of those areas. I'm going to talk a little bit about all of this side of there because we're very proud. Why? Nobody has this suite today in this industry. This is what we are today. This has always been tracks, innovation. We're starting on AI now. So starting with this task control, the paperless task tool that a mechanic will use in the hangar. Basically, they can be offline. We have case studies where Sabina does military work, no internet, no place to do anything, but they need to be offline while they're working in that stealth network, in that stealth hangar. Again, mechanic can do all his work. When they get out of that hangar, we'll connect. That's what offline, online technology will do for our customers. Again, that mechanic has all access to materials, tools, documentation, engineering support, everything on there. Aerodocs, again, documentation offline to be able to bring not just one vendor, all the vendors, all the OEMs, component aircraft under one app. This is what we do today. The ability to just press a button and look at, hey, this is what my IPC parts are, hit another button and request that part. So all within the manual. Again, nobody else does that. Visual check, the ability to do RFID with RFID technology, check our emergency equipments on our aircraft. That used to take hours. Somebody would go check all your life vests, all of the emergency equipment. Now we can do that with RF technology in minutes. Line control, ability to manage all aspects of maintenance for line maintenance and all offline capability. And the one that Sal talked about, tons of paper, content control. Again, content control is what we're doing in the background. Since we are the center of everything, when an 8130 comes in, we have it. When a ESA form comes in, we have it. When a task card gets accomplished, we have it. So what does this do? Well, all of that electronic data, at a certain time, you're going to return that aircraft. We have all that electronic data. And we put it out on ATA spec standards. So the leasing company will now transfer this information to the next operator very easily. Easy stock, warehouse management using RFID technology. Production control, able to manage all your hangar operations automatically in the system. Materials, mechanic, inspectors, any non-routines. Shop control, the ability to go and do all of those repairs real time and communicate to your production control. Hey, that component you have out there, is it going to be on time or not? So you can reschedule your work or not. Customer portal. Again, our MRO customers want to be able to see automatically, hey, I'm a customer. I want to be able to look at what's going on with my aircraft. Is it on time? Do I require to authorize any additional work, any additional material? All of that is captured electronically. So later on, if there's a delay in the process, hey, you did not go and authorize this component to be bought. All of those processes are being captured. In the cockpit, hey, we go now to the pilot and we know all the logbook automatically. We take that electronically and electronically we send it to our EMRO system. The same thing with cabin. So what does this help? Hey, I'm on the air. I send this out. By the time that aircraft lands, I have a crew there waiting with the right parts, the right skill to be able to fix that problem. The same thing with the cabin. I may have an something wrong in the cabin. I will have that person with that particular part already waiting before that aircraft even lands. So again, this is where our entire suites of mobility is ahead of the game. No one has it today, and that's why we're very proud of it. And again, I cut it down so I would not bore you guys. But again, you see what we can do with this. So now in a software company, as some people say, I don't go with that. Our profit margins, of course, since we're copying, we only develop it once. Now we're able to sell it multi times. Our profit margins every time we sell this increase. Someone said to me one day, "You're printing money." No, we're not. But it is what the concept is of all of this. And again, all of this information all in one source of data. So keep that in mind. So for the customer, you don't have to go to 10 different systems. Everything you see is there. And again, these are my achievements, and this is what I want to get into. So again, 138 customers in 35 countries. So this is what we've done by ourselves. And again, I will end up at that graph pretty fast, because it is amazing what we can do together with AAR. As we have here, my eyes are going. 5,000 aircraft we managed just for airlines. For MRO Camel, it's probably double that. Again, 62,000 users worldwide. 85 of those deal just with purchasing and logistics that deal with that type of business. But again, we have names there that you may recognize. Even, by the way, AAR has been our customer since 2009. So we have, like I said, very sticky customers. There's some there that have been there. Qatar, over 26 years with us. So again, very sticky software in the business. But what I want you to look at is the diagram on your right. Well, yes, your left. That particular item, the gray area, is where we are combining our efforts with AR. Over 50%, although we are the leaders in this segment today, as you can see, but 50% of those customers are today they'll have legacy system. And the great thing about them is they're tier 1 organizations. They're the Americans, they're the Deltas, they're the United, they're the BAs, they're the Air France. They're all using technology from the 80s, and they have gotten to the end of their life. They've been using Scepter, they've been using Merlin, they've been using SAP. All of those softwares are outdated. And today I just went through a couple of names. 50% of those customers will need software. But again, tier 1 organizations need tier 1 backing to be able to do all of this. And again, looking at what we are going to do together and bring both ecosystems, we need that for those type of organizations to be able to look at their services and hit a button like we do today, and be able to purchase, buy services all in one click. So, and we'll talk a little bit more about that in the next couple of slides.
Okay, thanks, Jose. You can feel the energy. By the way, they just did a webinar on all 16 of their mobility apps.
Yeah,
about
it's
a week ago.
it's, by the way, stop. The emails are coming in within the thousands. This is how, that's why I get excited about it. It's nobody has it. I saw the future, and I didn't know. I thought everybody was following. And now we know, no one was following us still. I got 6 years advantage on everyone.
All right. So through the transaction, the key here is, right, combining the software of Trax with what we're terming the hardware of AAR, and use that to transform in industry. So there are precedents where software and hardware have been combined to create something
By the
new.
way, I was the ones. This is where hardware meets software, and that was something I came up with, or we're talking about it. So it's not something new, but in this industry, it's the first time that it's done. It's makes sense, and being a leader in this software business, it makes sense to tie yourself up with a leader in the spares and components and service area.
Okay. So what that means for us is, what we want to do is, on the Trax software, on the Trax desktop, seamlessly integrate parts distribution, seamlessly integrate specific maintenance services. So when somebody in an airline goes to buy a part today, they have to issue RFQs in many cases. They'll go to somebody like an Aero Exchange, they'll go to somebody like a PartsBase, to somebody like an ILS. They'll send out a request for quote.
And by the way, we do this today using Spec 2000, because we use all of those EDI it's a hit and miss. They send this out. It may come back in an hour. It may come back in a day or not come back at all. This is not what we want to be. This is where the next generation of bringing AAR's hardware and our software together. There's no reason to do this archaic, old technology ways of doing business today.
Right. So what we want to do is have it all integrated on the Trax desktop. So when a buyer comes in today, they have a screen of things that they need to do. These are the parts that you need to procure. In some of the mock-ups that we've already done, over on the right side is a little button that says push on this if you want to find out who the suppliers are that have the part. You click on it and the price could be there, or there could be a button to request a quote. But the idea is how those suppliers earn their way on the screen is key. This is where the hardware part comes in. So what we want to do is build a trusted supplier network. So any supplier that's on that button has to earn their way there. So they actually have to have the part. They actually have to, if they're going to promise a delivery time, which is going to be required for an AOG product, they actually have to have a track record of delivering the parts on time.
And documentation. Keep in mind that this is one of the things that came up here. You need to see the electronic 8130 or ESA form. If not, that part is worthless to that airline. You got it there. That paperwork ain't there. You might as well just throw it away. It does not meet approval. So keep that in mind. We need to do all of those checklists. We need to see it before I hit, I'm going to buy that part. If I buy that part, all of those items, I expect it. If I don't get that expectation met, I'm going to rate you. And again, everyone in the marketplace. And again, starting with those 138 airlines that are using this system will know what happened.
Right. And so then the next piece of this is pricing. So in some cases, and Sal knows this well, you can price your part, you can publish it. In some cases, suppliers don't want to do that. They want you to request a quote. So the other part of this is just the responsiveness to the quote. So the suppliers are going to be related or rated on how quickly they respond to a quote. Key to point out, we'll build the infrastructure for the ecosystem. However, it's Trax's customers that decide who's in the ecosystem. Which suppliers do they want to have in the ecosystem? So it comes back to what Jose was saying about the ratings. If they have the parts when they say they have the parts, they get a high rating. If they deliver when they say they deliver, they're going to get a high rating. If they're responsive with pricing, they get a high rating. And it's the suppliers or Trax's customers who decide what ratings are high enough to earn their way on. A key part of this also is a little bit of curation. So to build a trusted supplier network, we will curate the network. We'll curate it. So certainly it's the customers, Trax's customers' decision, who is in, who is out, but we want to make sure the quality of the ratings, the quality of the data is positive. So that's kind of the vision for what we want to build. Enhances an end-to-end solution. It's powerful. And again, the key is curation. The key is integrating into the software all the power of a supply chain. And we do that through using the knowledge and the expertise of AAR. Other key point here is it's open. It's open. So it's not just for AAR parts and services. It's for other OEM and MRO parts and services. So that's kind of what we're doing. That's sort of the vision of for building it.
Okay. And one example of this parts new ecosystem, by the way, this is just one, because AR does not just sell parts, they do services. So one example is of this ecosystem is fewer delays for aircraft, giving the airline and MRO real accurate part information. Like he says, price, lead time, all of those things, paperwork. We need all of that for a part to be a good transaction. This is where AAR, working as a partner, will make this a reality. So this is something that now we can do, create that ecosystem, and of course, working with the hardware, the software, everything will be integrated. It will become a reality. Our customers have been asking for this for years, but now this is the possibility to do We're doing Amazon. Okay. So again, very simple. We're doing a buy now button that all of that information will come through. We call it the easy button or no more AOG. We know when an AOG desk comes in, what do? They start calling, they start sending emails. Hey, how great would it be that you're in a software and you can say, hey, yes, this, I can see the vendor's rating and say, hey, this guy has done this so many times and he has delivered on this or not. Why am I going to take my, this AOG risk on somebody that has not performed? Price is not an issue today, it's performance. So again, seeing all that concept and bringing this to life, again, is bringing what we do today in Amazon and Apple Store, bringing it to the aviation industry, bringing real-time buying of materials and real information for that end user. Again, with the power of 138 airlines and MROs that use Trax today, this is something that is very easy to do for us because now we have the marriage of the hardware. Before, we could do it, we could create it, but guess what? If we don't have this synergy, it would not happen.
Okay, good. All right, so to wrap things up, thanks, Jose. Growth initiatives. First one, somewhat boring, but it's critical to grow Trax. Trax, privately held company, has grown very rapidly. We're investing in infrastructure. Key investments are in quality, customer support, and accounting. So boring stuff, been working on that since actually prior to the closure of the transaction. The second key thing that we're working on is actually building the products that we just talked to you about today. And we just gave you one example of the Trusted Supplier Network and the Buy Now button. We have some other things that we're going to co-create over the next year. In addition, talked about AI. We actually want to finish some of those products. Again, it's going to be a Trax Pro series of products focused on specific activities in maintenance that can be safely automated using AI and machine learning. So we hope to be rolling those out at the end of AAR's fiscal year. And then the last thing that we want to do is look at expanding into services. So as I've been talking with Trax customers, as you know, we've talked internally about this, going paperless, going digital is hard. It's hard. There are consulting firms out there that can help some of these customers go paperless, but at the end of the day, it's the guys who built the software who can best help them go digital and be paperless. So what we're looking to do is expand in the service areas that will help Trax's customers go paperless and be digital a little bit quicker. So that's it. Appreciate it. Turn this over to Sean.
All right. Thanks, guys. So good morning. My name is Sean Gillen. I'm the CFO at AAR. Been with the company for a little over 4 years, and I'm excited to talk about our financial results in some more detail today. So jumping in, on this slide, you see our financial performance over the most recent 6 fiscal years from a sales, operating margin, EPS, and net debt to adjusted EBITDA. 2 things to call out on this page. Number one, you can see the impact that COVID had on our financial results in the middle of this period, specifically in FY20 and FY21, a decline in the top line and a corresponding decline in profitability. Number 2, and more importantly, what you see on this page is how we've performed since coming out of COVID. And I will call out is that you see the sales recovery, which has been relatively modest in an overall basis. It's a 5% CAGR from COVID FY21 to our most recent fiscal year. On that 5% CAGR and top line, we have more than doubled our operating profit and more than doubled our EPS. And how have we done that? It's by driving improvement in margin that you see on this page, finishing last year at 7.5% operating margin. More on that in another page. Last on this page, net debt to adjusted EBITDA. Tend to manage the company from a conservative standpoint on leverage. And I think we're very proud of how we were able to perform in COVID, even though the significant decline in profitability you see on the page, we were able to reduce our net debt to adjusted EBITDA over that period, putting the company in a really strong position as we pursue all the growth opportunities that we've talked about here today. So at 1.1 times the fiscal year we just closed out, and that's after the Trax acquisition, which closed in Q4. So let's go into a little bit more detail on this. And what you see on this page is our quarterly operating margin and adjusted EPS over the past 4 years. And to me, the headline says it all. Actions taken have yielded consistent financial improvement. So what actions did we take? You can see that on the right side of the page. We consolidated our footprint. We did close 2 facilities during this time period. We exited underperforming product lines and contracts, took COVID as an opportunity to accelerate actions that were, already in works or would have taken longer to complete. We did sell a loss-making, unprofitable business during this time period as well. Again, exiting businesses that aren't core and are underperforming. We had a series of overhead reductions over this time period. And then importantly, we used this market dislocation and our relative strength to take share. We did this in USM, we did this in distribution, and we did this in MRO. And we've also added differentiated capability, both organically as well as through the acquisition of Trax. All that together comes together on the left side of the page, and you can see this consistent improvement in operating margin, which flows down to an improvement in EPS. So let's take a step back. And to me, again, this is the proof point of all of that work and all of those actions. What you see on this page are our FY19 financial results compared to our FY23 financial results. On sales that are still 3% below pre-COVID, our operating profit is up 30% and our EPS is up 17%. Again, driven by the expansion in operating margin. You see the 190 basis point expansion in operating margin, even though sales are still below pre-COVID levels. And where do we think this can go? You heard John talk about at the beginning of the presentation our long-term 3 to 5 year financial goals from a sales perspective. We're seeking to drive 5 to 10% per year sales growth. We're looking to get our operating margin from the 7.5% up to 9 or 10+%. And all of that, both of those together will drive EPS of 10 to 15% growth per year. So how will we achieve that? How we allocate capital will help us achieve those financial targets. And this is our framework for how we think about allocating capital. Number one, maintaining that flexible balance sheet, which will enable us to drive organic investment, pursue acquisitions, and return capital to shareholders. Pausing a moment on each. Flexible balance sheet, maintain that conservative leverage that we have, kind of target net leverage ratio of 1 to 2 times EBITDA, a max leverage ratio of 3.5 times on the back of an acquisition. If that were to happen, we would seek to get back to that target net leverage of 1 to 2 times. Investing in the business, you've heard a lot of opportunity today from each of the businesses on investing the business to drive growth. And we're going to support new business win and part supply, specifically via inventory as we source used serviceable material. And as we win new distribution lines, the investment in those comes in inventory. In the MRO, we're looking to expand the airframe. Very excited about the Miami expansion we announced today. And we see additional opportunity to expand the footprint in airframe. Additionally, new component repair capabilities in the other parts of MRO. And then lastly, developing PMA products. We're in the early innings. We have put resources behind that. There's a team in place. There's a pipeline they're working against. And we're excited about them, taking that portfolio and starting to deliver results. Looking to opportunistic acquisitions. On the next page, I'll go into a little bit more on those strategic filters and financial criteria. But anything we do will be in the core of what AAR is: parts, repair, and integrated solutions, and always looking to increase the intellectual property in the portfolio like we did with Trax. And then finally, on return of capital to shareholders, we did initiate a $150 million share repurchase back in December of 21. We've been active on that share repurchase program. We've deployed 92 million of the 150, leaving 58 million remaining. And we'll continue to evaluate the usage of that and potential expansion of the share repurchase based on alternative opportunities. I will say, based on where leverage is and the cash flow profile of the company, we do have the flexibility to allocate capital across all 3 of these areas. So pausing on M&A. So what are the strategic focus areas and what are the financial criteria we put against that? You shouldn't be surprised to hear that the strategic focus areas are in the core. It's parts, it's MRO, and it's integrated solutions. Specifically, what does that mean? In parts, we're looking to add, value added or IP-enabled platforms. And in distribution, if we can expand our relationship with customers, our product lines, and our OEM relationships via acquisition, we would look to do that. In MRO, it's doing one of two things or both. It's adding differentiation to our offering, higher margin offering, and it's potentially increasing the scale of our offering across airframe and component repair. In integrated solutions, it'd be looking to add to our government past performance. And what that means is not only if you were to acquire a business, does it come with the contracts that it brings, but you also get that past performance, which allows you to have a higher win rate on things that we're bidding. And as we've talked about, we have an active pipeline, so any M&A would just be additive to that. And then lastly, similar to Trax, if we can acquire new digital or data tools that are specific to the aviation aftermarket, that's an area of interest to us. The criteria we put against those strategic areas. One, can we accelerate our strategic priorities versus organic tactics? Said differently, can we move quicker via acquisition than we can organically? Anything we buy will be growth and or margin accretive to the core business, improving the overall portfolio. And the after-tax, the rate of return will exceed the cost of capital. And as I mentioned, from a balance sheet perspective, flexibility to go up to 3.5 times net debt to EBITDA, would seek to delever after that. But, we have a fair amount of financial flexibility. If something fit the bill, we have the flexibility to pursue it. So bringing that together, finally, key messages. You've heard a lot of this here today. But number one, we got a focused portfolio. It's focused on the aviation aftermarket, which Chris Jessup talked about is a very good place to be. We expect that market to continue to grow, and we expect to continue to take market share in that market. Our operating margin is significantly improved, as I've talked about. And as I just mentioned, the strong balance sheet enables capital allocation across high return organic investments, acquisitions, and allocating capital to share repurchase. You bring all that together, what does it mean? Continued growth, margin expansion, and capital allocation, we expect will drive improving and continuing to improve shareholder value. With that, I'll turn it over to our chairman and CEO, John Holmes.
Okay, wrap it up here with some Q&A. Key takeaways, I'm not going to belabor these. I think you've got the points. I just, again, want to highlight and say how proud I am of the team to have delivered the margin expansion and the profitability expansion that you've seen over the last couple of years, which is particularly remarkable in an inflationary environment. To continue to drive margin expansion when you've got costs going up is really a testament to the execution ability of the team. As you've heard, large and growing markets, we've got multiple levers to continue to take share. We want to continue that margin expansion, and you've heard a number of ways that we intend to do that. The overall market that we're in has a history of being resilient. You can see that now. Never before has there been a better example of going through a very difficult time in aviation like we went through in COVID. And now you're hearing from every airline, including those that announced yesterday, just that demand is stronger than ever. And finally, as you heard from Sean, we've got a very strong balance sheet. We manage this company conservatively, and we're one of few aviation companies that emerged from COVID with actually less net debt and better flexibility than we did before. So we're proud of all of that. And like I said, we intend to keep going. And with that, we will roll to questions. All right, Rob, you told me you had a pile of questions. Let's go.
Thanks, Rob.
104 slides. We didn't answer them all? Okay. Whatever it is.
Sean, a quick question for you. But when we think about this margin target, this 9 to 10%, how does that look for each of the businesses?
Yeah, and I will also mention that we, have just yesterday, we put an 8K out showing our new segmentation. So we are now reporting this financial detail by segment. So I think what it means from a margin expansion is we're going to have a couple things. We're going to have a mix shift towards parts. That really is the fastest growing part of the business, and it's the highest margin part of the business. So as that grows, we'll see a natural benefit to parts, which will help drive that margin expansion. And then within MRO, as you talked about here today, the digital initiatives around paperless, increasing the efficiency of the hangars, that'll help us drive margin improvement. And then PMA, which is still in the early stages, as that ramps up, which will take a little bit of time, we would expect that, of course, comes with a much higher margin profile. And then the other piece, obviously, is Trax. You heard it here today, a growing business and the highest margin activity within the company.
So I don't mean to try to get specific, and you did say, revenues will grow at different rates, but simplistically, should we be adding 200 basis points to each segment to get to the target, something like that?
7.5.
I was going to say, I again, would slightly weight towards parts in that regard. And again, as the Trax and digital offerings expand, Trax, we announced it when we acquired the business, 35% operating margin business. So as we build it out, and obviously between Andy and Jose, you can tell there's a lot of enthusiasm there about the opportunities that exist. So that sits in integrated solutions. So that would have a disproportionate impact at integrated solutions over time.
Okay. And John, I don't know if this is for you or for someone else. When do the LEAP and GTF parts start to come into the system? And what happens there? Is that accretive? Is it dilutive? What's the time frame?
That's a great question for Sal Marino.
Hello. Yeah, that's a great question, actually. I mean, obviously, those engines have teething problems still today. So some of those parts that are still being replaced with new material. You know, you look out in the future, and when you start to see the curve start to decrease on what the current NGs and the COs today on the 320s is somewhere around 2028. And you start to see more of the inputs on the LEAP and the GTF, so to say. So, you know, as things continue with those assets, we still look at them as, you know, more of an airframe maybe play right now, just because of all the teething issues with the engines. But later in the 20s is when maybe start to see opening up with where we be playing that market.
Okay, and then just I'll stop after this one. But Frank, for you chart 44. I don't know if you can bring it up, but this is the 300% growth.
Yeah.
Chart. When I think about the distribution business, and you did talk about, Sean just talked about maybe M&A gets you bigger, but what is the constraint on that growth? Is it the customer? Is it the capital deployment on your end? How do we think? Because I would have thought that might hockey stick a little bit more.
Well, that was historical. Obviously, that was historical.
Understood.
And I think you've seen growth accelerating in that business in recent years. And Frank, tell me if I'm wrong here. I mean, the constraint to growth is really the customer. So the OEMs, you've got net new business that could come on the market. So OEMs that do everything themselves, that realize the value of consolidating with a distributor. And then it's agreements that are coming up for renewal out of our larger competitors for us to take share. So, I mean, it's really the timing of that is a constraint. We're out there. You know, the more we win, the more we can win. We're building a better and better franchise in this business. And so, you know, obviously we're getting deeper with certain OEMs, as you saw on the chart, but really we're moving at the pace of these larger companies and the decisions that they make. We are not the pacing item.
Yeah. Hey, John or Sean, Ken Herbert with RBC. Appreciate all the detail today. Can you talk about, with all the investments, is there a point in time at which free cash flow really starts to inflect and some of these investments sort of mature, so to speak? And are you comfortable with giving some sort of framework here in this setting around what we should think about as a conversion rate of either adjusted operating profit or EPS in terms of free cash?
Sure. Maybe I'll take the first part, and Sean, you can talk about the framework. I mean, hopefully you've seen in the last 2 years more predictable and more consistent cash flow out of the company. And so that's a result of building more predictability into the USM business, as well as those contracts on the distribution contracts starting to mature. Having said though, we are, and that business, USM and distribution, that's certainly organically the area where we intend to deploy the most capital in the coming years. We're very much in growth mode. So while we plan to be cash flow positive every year, to the extent that Sal has an incredible opportunity like those 9 757s we bought out of American, or we have an amazing deal like we have a couple times now with Unison that require upfront capital investment to secure ourselves a 10-year contract. We're not going to be afraid to make that investment. Unfortunately, we've got a balance sheet to do it.
And I would just add to that, you know, one of the other, you know, checks we use is just ROIC on new deals, new money spent, looking for 15, 20+% ROIC to make sure we're getting a good return on the capital deployed. And then just one other piece kind of specifically on cash flow, you know, CapEx was a bit higher this past year than usual for us because we are already putting money to work on some of these digital initiatives, paperless and the like. So I think those are projects that are in flight and will end. And I think you see CapEx come down, which will help improve the cash flow conversion.
Okay, that's helpful. And you've talked a lot about sort of organic investment opportunities within the parts business, both within USM and distribution. Can you talk about what the guidance implies in terms of how much those investments are really going to grow over the next 2 to 3 years or 3 to 4 years maybe level setting us with sort of the investments you made in fiscal 23, but should we see 15, 20% growth, greater growth? How does those investments grow over the next 3 to 4 years?
Maybe I'll focus on parts supply specifically because that's where the investments will go. It would typically take, let's say the average exclusive distribution deal, they vary between 5 to 7 years. Obviously, we want to get or 5 to 10 years. We want to get them on the 10-year side. It typically takes us about 2 years to completely convert over. So the cash will go out at once. The cash goes out. There's usually a cash component for the rights to the exclusive rights of the agreement, and then there's the initial inventory buy. But it takes us a little while to convert the channel, as well as often there's inventory that's out there from prior distributors or from the OEM that needs to drain itself out so that we can fully take over. So cash goes out, and then it's usually 2.5 years before we achieve full run rate on those distribution agreements. And they come in chunks, right? I mean, you can do a deal that's worth $5 million a year. You can do a deal that's worth $25 million a year. They come in chunks, but 2.5 years is typically the ramp up. I don't know if there's more you want to add to that.
Okay, just one final question. As we look at integrated solutions, is commercial a growth opportunity there? I know you cleaned that portfolio up quite a bit. Should we expect incremental investments there, or is that just sort of steady state and a lot of the growth within that business on the government side?
Selectively. We've learned a lot in that business. You've seen over the last 18 months, we've renewed and expanded a number of the contracts we were already on. And those renewals were at significant price increases versus where we were before. So we've learned a lot about the business. The customers that we're serving right now, they like the service, which is why they're expanding at a higher price. Selectively, where we have infrastructure in current markets and we really know the platform, we will expand. And if that expansion comes with inventory investment, we would do that too. Yes, sir.
Hey. Securities. Oh, thank you.
Hey.
First, I had a question for you on parts supply. Do you have an operating margin or IRR target that you could share specifically related to the USM business? And how does it compare to the segment average?
You want to?
Yeah, I mean, I would just say our the USM business is ROIC accretive for the company, and on new money we look for 20+% ROIC. You know, Sal talked about how they source and then how we financially evaluate deals. A really good track record in that business, and so anything we do in the USM part of our business is accretive to margins and ROIC.
Okay. And then if I could ask just on your plans to enter the PMA market, if you could just talk a little bit about the competitive landscape there and what you see as your competitive advantages as you try to take share in that market.
I think, first of all, it's a very large market, and we see that there's a lot of opportunities. Obviously, you've got Hyco and Wencor that are coming together. They're by far, now together, the largest player. But there's lots and lots of, and as that market continues to mature, and similar to USM, you're seeing broader user adoption of PMA. We think there's absolutely space for us to play there. There's Hyco/Wencor, and then there's a really big gap before you get to the next largest player. So there's a lot of opportunity there. As you heard from Tom, we've got to be really respectful of the OEM relationships that we have in distribution. So we've got to pick and choose our spots. But again, there's lots and lots of parts and lots of OEMs where we wouldn't run afoul of an existing agreement by going after PMA. And we are in a heavy maintenance business in a way that the largest competitor is not. And therefore, we are seeing things in the market that they may not see. They're not working on 1,000 aircraft a year in their hangars. And therefore, they don't have the access to data that we do as a result of that repair activity. And so that's just a different segment that we can attack in PMA that may not be a focus of theirs.
Great. Thanks for all the detail today.
Right. Thanks. Yes, sir.
Thanks for taking the question. I guess on the Miami expansion that's obviously been announced, you mentioned in the presentation that there was other opportunities that you're working on.
Yeah.
Could you contextualize the market opportunity for MRO expansion in terms of how much additional
opportunity there is?
Yeah, how much?
Yeah,
so I mean, by airlines.
Think about. Obviously, you've got roughly the size of our heavy maintenance business now that we've resegmented. We've got 6 facilities. Some are bigger than others, but you can do the math and say, okay, that size divided by 6 facilities. We're expanding one by a third. I think that in order for it to make sense for the amount of effort, kind of that 1/3 expansion by site is the lens by which we would view things to make sure that the juice is worth the squeeze, so to speak. So as we look at our North American market, and that's the focus, there's an opportunity to take our capacity up by, I would say roughly that amount. But we're only going to do that in areas where we know we've got assured supply of labor, we've got a supportive government. And it's really important to note that with the Miami deal, I just want to make sure everybody's clear. It's a $50 million investment, but Miami-Dade is going to reimburse us for that. So we've got the government that's underwriting that investment for us. And we will expand only when those things are true, where we've got a supportive government, long-term customer commitment, and access to labor. It's not true in every site that we operate in, but where it is true, we're going to look to expand.
Thank you.
Yes, sir.
Byron Callen, Capital Alpha Partners. A couple of defense questions. First, generally in your sales growth projections, I assume commercial is going to be growing faster than defense in that within the guidance that you provided.
Yeah, in the near term, I would say that's true. We see a lot of runway on the commercial side, given what's going on in that market. Having said that, in the defense market, our largest opportunities there are with the larger programs that you heard Nick talk about, and those come in chunks. Those are typically bigger. They're 10 to 50 million or more. WASS is over 100 million in revenue for us. They take a long time to secure, but when they do, most of the time they ramp up pretty quickly, and then you're on those contracts for a long time. And many of them require little to no capital investment, so they're ROIC accretive.
Is there any way to quantify what the pipeline of those opportunities might look like? I'm really thinking about the PBL programs that Nick might be pursuing.
If you look at total contract value of each individual pursuit that we're looking on and add them all up, it's in the billions.
Okay. And on the parts business, particularly for the F-16s, there's been a lot of movement around the Ukraine war, what's happening with the European fleets of F-16s. I know you talk about passenger miles flown, but just given the activity that you're seeing in military aircraft fleets, is there any way to quantify how that might be changing? And Frank, your visibility on what not just your U.S. Air Force or Navy customer might be using, but what your international customers might be looking at it.
In that pipeline number I just gave you, I'm kind of thinking about all of those things. But to your point on our visibility, we are now included on solicitations that we were not included on 5 years ago. We are being thought of in the same breath as some of the larger primes that have been there for years. We're still, quite frankly, getting educated on certain of those markets. These proposals that we make to the government are very, very complicated proposals, and the pricing is very complex. So getting smarter and smarter about how to write those things and compete effectively on the front end with when responding to the RFP, that's still a learning curve that we're going through. But the other thing that's helping us, and you heard Nick say this, is past performance. The more programs we're on, the more programs we can bid, because most of these things you're not allowed to bid unless you have qualifying past performance. And we're achieving that organically by continuing to grow that business. But we also, the more we win, the more other companies want to partner with us to help weave together a past performance story. So that's why that pipeline is about the largest it's ever been. But there again, these things take a long time to win, and the pursuit is complex, and we're still, in some cases, learning how to participate in that market.
My last question, any opportunities on the F-35 program, given the sales that they've seen? Is that within your horizon, or is that just beyond the realm of reach in this decade?
You're going to get Nick going.
Is it on? Okay. Yeah. So, obviously the OEM has done, and the OEMs have done a very fantastic job of, I think, locking up that total supply chain. So I think our role in that could be more on the logistics side, helping make sure, helping move things, run warehouse, those sort of things. We are starting to do maybe some parts repair and work with some of the OEMs to try to do on the component side and try to push into that a little bit more. I don't want to say we don't support new generation, because we do, but obviously I think it's going to take a little bit to substantiate like some of the other programs have for us.
Thank you. All right. Any other questions? All right, Rob, back to your pile.
I got a couple for Nick, although one of those might be for Sean, and then a couple for Sal. Sort of following up on what Byron just asked about with Ukraine and your expansion in the military side. Are there opportunities there? I guess maybe on U.S. assets, but for allies.
Yeah, so it's funny that, obviously we stood up a depot in a very, unique place considering everything happened. In full disclosure, that was well before Ukraine happened, right? I mean, so this whole Polish award, the award and the stand up was kind of before that all happened. But I will say, and Chris had it on his chart, if you look at defense spending overall, especially with some of our NATO partners, they're at all times high. Germany's spending, their forecast for spending's high. So where we're really see a value is on the air. We currently support. P8's a great example, right? Obviously, we have a lot of our NATO partners that are fielding P8s. We have almost become, outside of the OEM, the expert on P8s because of what we do on the depot side and the part side. F-16s are great. So you have a lot of maybe not, more Eastern European providers that are flying those. And because of what we've done in F-16, we've not only won the F-16 depot contract, but we've also been awarded other global maintenance differences training where we're doing support for other, allied partners as well. So I think where there's a U.S. fleet component of it, we have a tremendous opportunity to support those allied partners. Obviously, Middle East is still a big opportunity because they're very big, heavy users of American assets or American type technology. But we're actually pretty bullish on the international market purely because the spending that we're seeing is something we've never, frankly, seen before. So if it's an airframe we currently support, great opportunity. If it's a new airframe, then I think it's anything like else. How do we break into those markets if we see a longer term opportunity?
Okay, and then this one is either for you or for Sean, because on margins in your business, but how much runway is there from continued roll off of the underperforming contracts, or is that pretty much handled?
There's still runway from kind of the commercial PBH standpoint. I mean, the heavy lifting's been done in terms of kind of exiting and restructuring, but I think you'll see continued improvement because now they've really got those operations working better. And so net new business will be accretive to those margins. And there's some incremental opportunity on the existing portfolio. It won't be to the magnitude we've seen over the past 2 years, but that's one of the areas when we think about kind of improving the margin of the company that there's still opportunity.
Okay. And then just switching to Sal, I think you were the one who were talking about the supply chain maybe getting a little bit worse again. And was that turbine blades or anything other? Could you add some color?
Yeah, sure. I think as the shops have, 6 months ago, there was still probably quite a bit of capacity, especially around the CFM arena. When China came back on board, it was kind of one of these inevitable things because everyone's using the same repair shops, a lot on the engine side, turbine blades, like you mentioned. Life limited parts, the key parts that everyone wants to get repaired. And once that flood came back in, when things were getting better a few months back, it's, kind of backtracked a bit again. So, I think the current kind of thought behind that is hopefully by the end of the calendar year that some of that will start to improve again. But in the meantime, there was actually certain repair shops that stopped having inductions of any material that would come out, ask you not to send parts in for 2-3 months just so they can catch up. And again, a lot of that was driven by what happened in China and coming back on board earlier in the year and the shops being that flooded.
Okay. And then my last one for you, and it's a high level question, but when we think about the profitability in USM, is the spread between what you pay, how you buy and sell better in an inflationary environment or a non-inflationary environment? Or is it just static?
It's static. I mean, you should think about our business. Somebody was asking this earlier, hey, is inventory you bought back in 2019, now that prices have gone so much on new part, are you making a disproportionate spread on the parts today? The answer is no. We are market in, market out. And so we get into assets, we turn them, we get out of those assets. Sal's mantra to his team is don't fall in love with your inventory. We're market in, market out. So the short answer to your question is that the spreads on assets are pretty consistent. Any other questions? Okay, well, once again, really appreciate the time and interest today, and we look forward to being back with you in the future. Thank you.